Good evening all. Now we are playing ICI motto song. I request all the participants to put their right hand on their heart.
यशस्सुप्तेषु जागृति यशस्सुप्तेषु जागृति तावं पुरुषो निर्विमानः तदेव शुद्धं
Chairman of Ahmedabad branch, CA Fanil Shah, in his absentia. Today's learned faculty of first session, CA Rashmin Vaja. Chairman of Indirect Tax Committee of Ahmedabad branch, CA Rahul Maliwal, and Coordinator, CA Devam Sheth. Participants, it gives us immense pleasure that we are going to organize this virtual meeting of advanced GST course here, because previously we thought to have it in our institute during March only, but as time changes, we also have to adopt the change, and that we experienced during the GST regime. And I want to congratulate all of you that you all are ready to accept this challenge and thought to learn this GST law again with all the experts in this area. And I'm sure that when we are having faculties who all are from Ahmedabad, we are able to talk more proactively and we are able to share the thoughts. So friends, I request all to share your thoughts and ask as many questions you are having, so we can definitely try to resolve this and take the benefit of these learning sessions. One more thing, that on this Sunday we are going to organize a blood donation camp, so request all to take participation in it. And this fitness challenge is going on, so all of you, I'm sure that all of you are taking advantage of this and try to challenge yourself, challenge your habits, and definitely take participation in this fitness challenge. With this, now I request Chairman of Indirect Tax Committee, Rahul Maliwal, to give his opening remarks and theme behind this virtual meetings. Thank you.
Thank you so much, Bishan Bhai. Good afternoon to everyone. Welcome you all in the advanced GST workshop on this particular virtual mode. The chairman of the branch, Fanil Bhai in absentia, the faculty for today's session, Rashmin Bhai, our own secretary of the branch, Bishan Bhai, and the coordinator of the session, CA Devam Sheth. Again, welcome you all. The whole objective behind the series is to give the detailed understanding with regard to the GST, along with the act, recent changes, and the changes that has been come a decision by the court of law as well as the advanced ruling. Now, in this particular series, we also added the last session for resolving the queries of the member. We are very thankful to our chairman Fanil Bhai, who not only approved the series within a minute, but also he was so generous to give the complimentary GST updated background material by ICAI, which is one of the best material that is available on the GST. That is also, I am also thankful to our secretary Vishan Bhai for arranging that background material in such a shorter period, as well as working shoulder to shoulder to develop this particular series. We again more thankful to our faculties because they given their signal in one just a single phone call, and they are ready to deliver the lectures and give their inputs from their on their busy schedules. Now wishing you all a happy learning session. Now I'll request CA Devam Sheth to give the brief introduction of our today's faculty, CA Rashmin Vaja.
Thank you, Rahul bhai. Good afternoon, all. It is always an honor and privilege to introduce Rashmin Vaja sir, who has been my principal since my internship days. So, Rashmin Vaja is a chartered accountant since 2004 and joined KMS as a partner in 2007. He has a vast experience in consulting and litigation in indirect tax and has advised several Indian corporates in the field of indirect tax. He has delivered lectures on service tax and GST at various branches of ICI and all Gujarat Federation of Tax Consultants and GCCI. He has provided training to officers of Ahmedabad, Bhavnagar, Gandhidham Commissionerate of Service Tax Department. He has also provided training to officers of Commercial Tax Department of Gujarat and conduct various training for the offices of Auditor General Ahmedabad. He is also a member of committee formed by ICI for giving suggestions on GST and also selected as a faculty by ICI New Delhi for giving trainings on GST to the trade and industry as a part of GST awareness programs. He is also a regular attendee of various study circles like the Bombay Chartered Accountant Society, Chamber of Tax Consultant, ICI and other trade forums. He is also a member of Indirect Tax Committee of Bombay Chartered Accountant Society for the year 1718 and 1819. And as everyone knows that he has also co-authored books on GST, service tax and VAT. So now I will request Rashmin Vaja sir to take the session forward. Thank you so much.
Thank you, Devam, for kind words. Secretary of the branch, Bishan Bhai, our evergreen Secretary of the branch, Bishan Bhai, my dear friend and Chairman of Indirect Tax Committee, Rahul Bhai. At the outset, I would like to thank Ahmedabad branch as well as the Chairman, Shri Fanil Bhai, for giving me an opportunity to share my some views on GST. Before starting for the discussion on the GST, I would like to just add upon something that Bishan Bhai said, that it is a learning phase for us, as it is a typical sort of situation wherein we are trying to adopt to new rules, new regulations, new way of living. It's like a new normal. I just wish and pray that all the participants, their near and dear ones, and everyone are safe and sound, and all are following proper rules and regulations as framed by the government to be a responsible citizen as far as this pandemic is concerned. Now, to start with this topic of the day, today we are having this topic of levy and collection and classification and exemption. I would dwell more upon the levy and collection because it is a very vast topic, and briefly touch upon the classifications and exemptions. Of course, I'm not going to the each and every exemption entry, just briefly touching it upon. So before going to levy and collection, because the levy and collection is something which is known as a source from which a tax regulations starts. So before going to levy and collection, we just need to briefly go through the basics of GST. Basics of GST, this is very initial slide that we used to have when GST was introduced. But the important line is that levy and collected on value addition at each and every stage of sale or purchase of goods or supply of services based on input tax credit method, but without state boundaries. Now, this is what something that was written in the white paper of GST when it was about to be introduced. So what we understood is that GST was supposed to be a stage-based, destination-based consumption tax, and credits will be allowed seamlessly. No blockage of credit so far, and there would be a lot of benefit to the end customer so far as reduction in cascading effect of the supply of goods and services. So that is what we had understood. Now, before just touching upon or before just going to the basics of GST or other levy and collection, I just would like to compare the erstwhile structure of indirect taxation with this current structure of indirect taxation. Erstwhile, there is three different levy: excise duty, that is manufacturing of goods, it was on the activity of manufacturing of goods; VAT or CST, that was a state topic and it was on the sale of goods; and service tax, it was on provision of services. Now, there are, as it was said, that we all know that intra-state of supply and interstate of supply. So whenever a supply is happening from a particular state to another state, it should be considered as interstate supply, and IGST is levied, and CGST, SGST is levied in interstate, and all the imports and exports should be considered as interstate, and hence IGST shall be levied on that thing. Now, the common misunderstanding that we all had, or rather we all had at that point of time, I'm sure by the time passes, this misunderstanding might have gone, but I have asked this question number of times, that how do we decide that whether a particular supply is interstate or intrastate transaction? Then the common answer that I used to receive was that on the basis of place of supply. But that is again a half answer. That is not a correct answer. That if I want to identify a particular transaction as an interstate supply or intrastate supply, I need to identify two different elements in a supply transaction, that are location of supplier and place of supply. So whenever a transaction is happening, we need to identify two different things. Of course, location of supply is definition is given. Place of supply, there are section 12 and 13 of IGST Act that defines the place of supply. So location of supplier and place of supply needs to be identified. Now the simple rule would be, or rather thumb rule would be, that whenever location of supplier and place of supply, these both elements identified in a transaction happens to be in a single state, in one state, in same state, it is to be considered as intrastate, that is CGST and SGST shall be levied on it. However, if it happens into two different states, then it would be interstate and IGST will be levied. Imports and exports, of course, should be considered as interstate as per section 7 of IGST Act. Now, this is a process of understanding or identifying whether a transaction is interstate or intrastate supply. But for example, if it happens that we somehow misunderstood a particular transaction or misjudged a particular transaction, and instead of CGST, SGST, we paid IGST, of course, the same amount, same rate, or vice versa, we paid CGST, SGST instead of IGST, or IGST instead of CGST, SGST. So what could happen? What could possibly happen is that department may come to us and say that, look, you have paid IGST, it was supposed to be CGST, SGST, so pay again CGST, SGST, and IGST, you can claim the refund of it. Now the question was that when I pay IGST again, when I have paid CGST, SGST, am I supposed to pay interest? Now this was a common question that generally used to be, the answer used to be yes, I'm supposed to pay interest. But let me clarify this, that there is a specific provision, there is a specific section number 77 of CGST Act, which answers this question, that no, we need not to pay interest on wrongly paid taxes. I mean, that interchangeably of interstate and intrastate understanding, and there is no requirement to pay interest on such transaction. One more thing, there is an understanding that for claiming a refund, two years relevant date from the 2 years is applicable. Of course, it is applicable, but from the date of payment it is applicable, and not from the date of return in this particular scenario. However, it can be interpreted that for this particular thing, it is not actually a refund that GST law intends to give, but it is a by mistake payment of tax, which is not itself a tax. So there can be an argument stating that 2 years of limitation may also not apply to this particular transaction. Now, this is what the law is. The extent of law is, that it extends to whole of India. Of course, there was this exception of state of Jammu and Kashmir, but eventually it was withdrawn. So now it is applicable to the entire state of India, including Jammu and Kashmir. So there was a transaction, and I will be touching upon this transaction again, just to refer to this transaction in this slide, because to understand the extent of India, that whenever a particular person is purchasing a goods from, say, USA, and out supplying the goods to China, then whether on that particular transaction GST shall be applicable or not. So that was the question, and that was answered by Kerala advance ruling in 2018, stating that no, it shall not be, GST will not be applicable. Now for a while we will park this particular issue, this particular question. Of course, I know there is an amendment in Schedule 3 as well, but we'll park this question for a while to discuss it later because of the recent advance ruling application of Gujarat. Now we are on to the proper topic before having this initial understanding of basics of GST. Now, for any tax regulation, a tax can be collected only by way of a charging section. So whatever charging section covers is to be covered under the tax regulations, and tax can be collected. And if at all it is not there, then tax cannot be collected. So as I said, that it is the source from where the understanding of GST can be we can have the understanding of GST, or rather we can understand that on what all transactions GST can be collected. And if at all it is not covered, any particular specific transaction is not covered, then GST cannot be collected. Because as the topic itself says, the levy means a charge on a particular transaction, activity, nature, supply, whatever we say. A charge and the collection. Of course, there might be some levy, but we have a plethora of judgment stating that okay, there is a charge, but you don't have any collection mechanism. So collection mechanism fails, the levy also fails, and there is no tax. So charge means collection and levy both needs to be there while we are understanding the charging section. So I'll just read out the highlighted part, that a tax is to be levied. A tax is to be levied, that is called as the Central Goods and Service Tax, on all the intrastates. We are looking at the CGST Act. So similarly, there is an IGST Act on all the intrastate supplies of goods and services of both, on the value determined under the section 15 at such rates, collected in such manner and paid by the taxable person. So whenever we look at a charging section, these are the supposed questions that we must ask, and these are the replies that we must get from a charging section. That what shall be levied? Okay, a tax shall be levied, that is known as GST. On what? On all the supplies of goods and services. On what amount? Then value determined as per section 15 on the valuation rules. How? Collected in manner as prescribed under payment rules. Who shall be payable? The person liable for registration, that is section 22. When? That is time of supply, and where? That is place of supply. So these are the questions that we should be asking to a charging section. We are looking at a charging section, and these all replies we must undoubtedly get from a charging section, and then and only then we can say that this particular transaction is covered under GST. Now, if you can see that second line of subsection 1, there is an exception, except on the supply of alcoholic liquor for human consumption. And the subsection 2 says that central tax on supply of petroleum crude, high speed diesel, motor spirit, natural gas, and aviation turbine fuel, that are petroleum products, shall be levied. Again, there is a levy. So levy is there, but there is no collection. So levy with the effect from the again date is going to be notified. So there are two exceptions, rather we can say, in this charging section. One is the supply of alcoholic liquor for human consumption, and another is the petroleum products. One is the exception, out and out exception, and another is, of course, tax is levied, but effective date is yet to be notified. And so if I want to charge GST on a petroleum products, I need to give a notification by way of just to give an effective date, and by that I can charge the GST on petroleum products, of course, passing it through the entire process of passing a law. However, when there is an exception of supply of alcoholic liquor for human consumption, I cannot charge by just giving passing a proper law in parliament. I need to amend the constitution again, which so the entire process of a constitution amendment and all the things needs to be done. So that is the difference. Of course, these two are exceptions in charging section itself, but these are the two major difference. Now, when we were discussing the charging section in its entirety, I would like to point out a difference, a major difference, that this charging section is as it compared to service tax is there. In case of service tax, there was a the charging section said that there shall be tax levied at so and so rate by on provision of services by one person to another person, and at the end it was saying that in taxable territory. So the requirement of the taxability or leviability of service tax was that there was an additional condition that the provision of service or agreeing to provision of service must have happened in taxable territory. Now that in taxable territory is missing in the charging section. Now we'll see what will happen if some supplies happens to be outside taxable territory in case of GST. Just parking that question as well. So this was a reverse charge 9.4, a very dreaded one, and it was withdrawn. and then deferred, and then it was substituted by as on 1st of February 2019. So till then, notification, or rather by way of notification, they had just postponed it, and the applicable date was 12th of October 2017. So from 1st of July 2017 till 12th of October 2017, this reverse charge was applicable on all the services or all the supplies by an unregistered to a registered person. Yes. So now we have an additional filter. So far as I can compare it with service tax, we have an additional filter of supply, definition of supply, and definition of supply is very much important. Now I just want to point out one more thing over here is that in case of charging section, the requirement is that there also must be a value as determined under section 15. Now, for the purpose of this act, supply includes. So the primary thing is that it is an inclusive definition. It can cover the points apart from whatever points that has been written. The first 1A that says that all forms of supply of goods, and it includes sale, barter, transfer, exchange, license, rental, so everything. It's not only sale, it includes everything. And agreed to be made for a consideration. Now mark the words consideration by a person in course or furtherance of business. So the first one says that in course or furtherance of business. The second one says that import of services for a consideration whether or not in course or furtherance of business. So in case of import of service, it might so happen that it is not in course of furtherance of business, but it is covered under the definition of supply. And then there is this, the most discussed one, schedule 1, that is without consideration. We'll discuss that in a later part. Now this entry number D was deleted, stating that the schedule 2 items, that are the list of supply of goods and supply of services mentioned in schedule 2, is not intended for defining or including something in a supply, but it is only for the purpose of identifying a particular transaction or activity to be classified amongst goods or classified amongst services. So that is again a new point or new issue that is we are looking at so far as litigation is concerned, and it is yet now not that much discussed, but at some point of time, at some point of discussion, it is of course discussed that if at all there is some entry or activity specifically that agreeing from refraining the that act and tolerating an act, that entry, if it is not covered elsewhere anywhere in the act except for schedule 2, and then whether we can say that schedule 2 can give a new source to an entry on which tax is applicable. So that is again a question that a time will give an answer to it. Then there are certain transactions which government may declare as a neither goods and supply of goods nor supply of services. Now as we understand that a supply is again a filter, charging section is again a filter. So along with that, goods, definition of goods and definition of service is also a filter. So there are a number of questions that we should be asking before concluding that this particular transaction or this particular entry is or activity is covered under GST law and tax is to be payable, rather than jumping directly that we cannot find anything under exemption and hence it is taxable. So that should not be the process. Yes, so this I have tried to bifurcate between what is in consideration in course of business. So the schedule 1 items, yes, we don't know, we don't want anything so far as consideration is concerned. So when a branch transfer is happening from one state to another state within the same entity, then tax is to be levied and tax is to be collected and paid. Of course, it is available as a credit to the receiving state as and when it eventually sells to an end customer. And transaction is agent is also covered under schedule 1 transaction, that is when you transfer the goods to your agent, then also without consideration GST is to be payable. Now as I was saying that there are different filters that we are looking at when we look at a particular transaction. So the charging section said that taxable there should be levied CGST on supplies of goods or services. So we have looked at the definition of supply. Now we are going to look at the definition of goods and services. Goods means every property, every kind of movable property other than money and security. So money and security are excluded, but includes actionable claim. So there is an inclusion. Growing crops, grass or things attached to or forming part of a land which are agreed to be severed before supplier under a contract of supply. So goods includes actionable claim, but it does not include money and security. Money definition is given under 75 and security definition is given under 101, which again is as per 2H of Security Contracts Regulation Act. Services means anything other than goods, money and security. So again, exclusion of money and security is there in services. So the important part is that a money or security are not covered under definition of goods and services. So the first filter must be whether a particular commodity, a particular item is covered in the definition of goods or services or not. That is to be tested. If it is not covered, then further no filtering is required. It is out of GST purview. So actionable claim, yes, actionable claim is included in definition of goods, but again, Schedule 3 is the schedule which says that the activities or transaction that should not be considered as goods, neither it should be considered as services, supply of goods or supply of services. So again, it should be out. So it said that all the actionable claims are in Schedule 3. So it is included in definition of goods, but they are not to be considered supply of goods or services other than lottery, betting and gambling. So eventually what happens, that actionable claims that we can relate to lottery, betting and gambling are only covered within the charging section or within the GST law, because of course charging section is apart from the Schedule 3 item, which is another filter. So the actionable claims, although it is covered under the definition of goods, it is excluded so far as other actionable claims are concerned, apart from lottery, betting and gambling. So lottery, betting and gambling that are covered. So all actionable claims are not covered, are under the are neither to be treated as a good supply of goods nor to be treated as supply of services. So now there are a lot of supplies coming out. So I just tried to brief it out in a single slide, that what all supplies are there, how it should be looked into, what are the natures and what are the implications of this supply. So there is this taxable supplies, we have this not taxable non-GST supplies, zero rated supplies, exempt supply, nil rated supply, and of course no supply. The last no supply is nowhere mentioned over there. Of course Schedule 3 is saying that neither supply of goods, no supply of services, but we can understand this as a no supply. So first is taxable supply. Of course, we looked into the section 7 of CGST Act, and that is definition of supply. So whatever is covered under the definition of supply is a taxable supply. It is taxable and GST is to be paid. Now, not taxable and non-GST supplies are the exclusions in the charging section. That are the charging section, section 9 of CGST Act, so that are not taxable outside the purview of charging section. And two categories that we discussed recently, the petroleum products and alcohol for human consumption. Again, both are separate. In case of petroleum products, it can be bought into the GST levy by way of proper process, but for alcohol for human consumption, we need to go to change the constitution again and amend that particular law, and then only there can be levy of GST on alcohol for human consumption. So no GST, of course, as of now on both the cases. Zero rated supply. Now, as I said, that word, we parked for a while for that particular word of outside taxable territory, as we compared it with the service tax charging section, service tax levy and collection. So in case of service tax, if there was a certain supply or other service that was provided outside taxable territory, there can be no GST. It was not taxable, just like serial number 2 in this particular table. If it was an export of service, then it was not taxable. It was outside the taxable purview of charging section. However, in case of GST, this zero rated supply, that is export of goods and services, and SEZ supplies are very much taxable. They are very much taxable, but GST cannot be paid or should not be paid if we follow proper procedure, like obtaining the LUT. Now the obtaining of bond is no more there, but obtaining LUT and proper procedure needs to be followed. Documentation part and everything needs to be followed. But if somebody asks that whether zero rate supply is taxable, yes, it is very much taxable, but by way of this all process, GST is not required to be paid. Exempt supply, nil rated supply, again the question is that whether they are taxable. They are very much taxable, but they are exempted by way of notification or by way of recommendation or something like that, either conditionally or unconditionally. So there can be conditional exemption, there can be unconditional exemption as well. And the no supply is something which we can generally say that Schedule 3 item or the item or the item that government may notify stating it as neither supply of goods nor supply of services. So a common understanding can be the employer-employee relationship, services provided by an employee to the employer, and or supply of land, that is a simpliciter transaction, simpliciter sale of land, and that is covered under Schedule 3, no supply, and it is outside the purview of GST, so no GST. So these are the steps we need to follow. As I said, this filtering, the filtration process must be, we must start from whether this particular item that we are looking at, whether it is covered under the definition of goods and services or not. If it is not covered under goods and services, then it is out. I mean, there is no need to go into further steps. Then it must be covered within definition of supply. So it might be goods, it might be services, but it might not be covered under the definition of supply. For example, Schedule 3 items, services provided by employee to employer, sale of land, all such are we can say that they are all services. So services provided by an employee to employer, yes, it is a service, but it is not a supply as by virtue of Schedule 3 of CGST Act, correct? Now, after this filtration, we again need to go to charging section, that whether, even though it is a goods, even though it is a supply, even though it is covered under the supply, but whether charging section covers it or not. So petroleum products are very much goods, they are very much covered within the definition of supply, but they are excluded from the charging section. So then if they are excluded, then there can be no GST on it, and if at all there is an exemption or not, then that must be tested. So far what we had understood, or what we discussed, is this a snapshot of that type of thing, that GST Act, GST tax is to be collected. Now composition levy is actually, I mean, if we go hyper technically, then it is not a tax, it is just an amount that is required to be paid in lieu of GST. So it can be said as a composition levy, but an amount to be paid. So GST is basically on supply, and this is what the entire framework of GST is: the nature, I mean, goods, services, goods or services, time, that is general supply, continuous supply, reverse charge, and others. Then place of supply, interstate, intrastate, imports, exports, and the value, that is transaction value and valuation rules. So this is a snapshot of entire GST. This is what we are discussing about that Schedule 2. As I said, that it was excluded from the definition of supply, stating that Schedule 3 needs to be taken into consideration only to identify that whether this particular thing is goods or services. So it cannot define or add up something to the definition of supply. Schedule 3, this is what we have discussed. From 1st of February 2019, this schedule was enhanced. We'll see a brief history of behind this enhancement of schedule. So what are all items that are under Schedule 3 that are not to be considered as supply of services or supply of goods? That are services by employee to employer, that is what we discussed. Services by court or tribunal, services performed by various members of different authorities, that are member of parliament, legislature, panchayat, municipality, and other local authorities. Services of funeral, burial, crematorium, and mortuary, including transportation of deceased. Sale of land, that is what we just now discussed. Duties by a person holding any post in pursuance of constitution. Actionable claims, this is what also we discussed. Services by chairperson of any body established under the government authority. Sale of building, of course, sale of land and sale of building are in the same thing, but just to point out, sale of building subject to clause 5b of Schedule 2. We'll discuss this and that also briefly. Now, these three items were included in this schedule. So these three items were thought upon or afterthought because of the normal commercial transaction that were happening in course of business, which were, I guess, might be forgotten or might not be well addressed in prior to 1st of February 2019. So this is a very much welcome step that government took for enhancing this particular list, but there is a lot of impact when we discuss this particular thing. These three items were that the first item we discussed in the initial slide is that the supply of goods from non-taxable territory to another non-taxable territory. For example, I am into India and my supplier is in US and my customer is in China. So from USA to China, direct goods are moving and I'm in India. So that particular transaction is not covered. It is under the Schedule 3 item, so neither supply of goods nor supply of services. Supply of warehoused goods to any person before the clearance of own consumption. We'll discuss this briefly in a while. Then supply of goods by consignee. This is basically a high C sale transaction by the way of endorsement of the documents of title of goods before the goods are landing to the port of customs and are cleared for the home consumption. And we'll also discuss rule number 42 of CGST rules on ITC reversal. So these three transactions were very much commercially done transaction and were not very much well addressed, and that were specifically included in this schedule from 1st of February 2019. Now, as I told you that there is services by an employee to employer in relation to employment. Now, the vice versa situation, there is a question mark about that. That services by an employee to an employer are under Schedule 3, so they are not covered, and it should not be considered as supply of goods, neither supply of services. But what about the services provided by employee to employer? So this is a press release which was as early as in 2017. I won't read out the entire thing, but the highlighted part in the third point is that further it is mentioned that if services are provided free of charge to all the employees by the employer, then same will not be subjected to GST, provided appropriate GST was paid when procured by employer. Now this is something beyond act. There is no such mention about this proviso of appropriate GST being paid by the employer and all. A point that needs to be taken care of is or understood is that employer and employee are a related party. Both are considered as a related party as per section 15 of CGST Act. And in case of related party, I need, if at all there is some transaction happening without consideration, then I need to value the transaction at open market value or at a value on which I'm supplying the goods and services to third party, and accordingly taxes to be payable. So point number one, in Schedule 3, only services by employee to employer are covered, not vice versa, that is services provided by employer to employee. So there is a big question mark to that, but it can very well be said, an argument very well be said that the services that are provided by employer to employee are very much covered under the contractual agreement, because I am an employee, I am getting the services from employer, so it is actually an offshoot or a byproduct of my contractual employment agreement with my employer, and hence it is also covered under the Schedule 3 item, and hence no GST is paid. So this was a press release which said that a free of charge by a employer to employee, it's not covered, and this type of press release can be used or can of course it is not by the board, or it is not by a notification, but of course it is issued by Finance Ministry. So this will have some value as and when the litigation is there in a higher forum. Now this was an advanced ruling. This also amplifies what press release says, that if separate consideration of employees has not been charged, then whether GST is covered or not. That is, so in this particular thing, this Caltech Polymers was recovering some food expenses from the employees for the canteen services provided. So the company approached to the Advanced Ruling Authority of Kerala, stating that whether this is covered under the GST Act or not. The specific question was that whether it is covered under the Schedule 3 item or not. But as I said that if we hyper-technically interpret that particular thing, then only the services by an employee to employer is excluded, and not vice versa situation is excluded. So that was not covered, and Advanced Ruling Authority ruled out that it is covered. And since you are recovering something, so bypassing that press release, if you are recovering something, that GST is applicable on that particular transaction. Now, these are some terms that are being used. Of course, these were there in erstwhile service tax law, but not defined properly. But these are certain terms that has been coined newly or defined newly in this particular law: the mixed supply, composite supply, and a reference of principal supply in the composite supply. To understand this mixed supply and composite supply definition, we need to I can just give an illustration to it. that a supply of package consisting of canned foods, sweets, chocolates, cakes, dry fruits, aerated and fruit juices when supplied for a single price. So mixed supply definition says that means two or more individual supplies of goods or services or any combination thereof for a single price. So point to be noted is a mixed supply, a single price is very much needed. So if there is no single price, it cannot be covered under the definition of mixed supply. So if you look at the definition of composite supply, means a supply of two or more supplies of goods. It's a similar type of wording, but that are naturally bundled. Now this is a point of debate, and it has to be discussed on case-to-case basis, but which are naturally bundled and supplied in conjunction with each other in ordinary course of business. So it is in ordinary course of business, then it is to be considered as a composite supply, out of which one is a principal supply. And principal supply is the supply that predominantly gives an element to this composite supply. The intention or intention of this particular supply, which does not constitute as an for the recipient as an alternate supplies, or it is not an ancillary supply, is to be considered as a principal supply. So in mixed supply, we need to have one single price. In composite supply, out of multiple supply, we need to have one principal supply, and we can have multiple prices for different supplies in composite supply. So this is a comparative chart. Naturally bundled in composite supply, yes, it is needed. Mixed supply, no. Supplied together, yes. In both the cases, yes. Each supply available, supply individually. In case of composite supply, the ancillary supplies are not available individually. It entails the principal supply. So that is why there is importance. It is an important to have principal supply in a composite supply. That is not so in case of mixed supply. One is principal supply, of course, yes. In case of composite supply, other supplies are ancillary. So yes, in composite they are ancillary. Mixed supply, they are not ancillary, but they are bunched up together. They are bundled up together. Single price. In case of composite supply, it might be a single price, it might not be a single price. In case of mixed supplies, in case of mixed supply, we need to have a single price, because if you take an example of mixed supply, and if it is not a single price, then for example, if you go to D-Mart and we purchase n number of items for 18, 20, 15, 20 items, and all are separately listed out, all are separately billed out in a single invoice with different prices, with different HSN, then they are not neither mixed supply nor composite supply. They are independent supplies. All goods can be, all supplies can be goods. Yes, this is important, that there can be multiple supply of goods, there can be multiple supply of services, there can be combination of goods and services. So in both the cases, there can be only more than one supply of goods, more than one supply of services, then can be combination of goods as well as services. Now, when we look at this particular supply, I mean the definition of composite supply or mixed supply, the levy of GST on plotting of land, because that is again a very ripe topic, a very boiling topic as of now, because we are having an recent ruling by Gujarat Advance Authority about whether plotting of land is taxable, GST is payable or not, or it should be considered as a sale of land. And we all know that in case of plotting of land, what happens, there is a piece of land which is plotted, and different plots are sold to the different customers. But before selling of land, the owner, or maybe we can say developer, he creates all the basic amenities like common roads, maybe clubhouse, or a boundary wall, or sewage, I mean the facility to sewage and the water supply, drainage pipeline, and all those things. So basic amenities out and out of the plot, just to make that plot available to the customer, so that he can just go and construct his building, residence, and start living in it. So for rest of the thing, he need not to do anything. So what all services or basic amenities that are being constructed or developed by the developer are outside the boundary, or maybe at the most it construct the boundary of the plot. That is what the transaction is. So keeping in this mind, we would like to discuss this recent ruling in case of Dipesh Anil Kumar Naik on sale of plot. So this is what the brief facts of the case were: that applicant was the owner of the land who developed the land with infrastructure such as drainage line, water line, electric line, land leveling, and approved plan passing through approved plan passing authority. Now, what was the scope of work? The scope of work was that the vacant land was supposed to be sold as an individual plots to the buyers after obtaining necessary plan approval. And of course, the plan approving authority also said that you need to have these basic amenities before you can sell the plot. So you need to level the land, construct the boundary walls, construction of roads and tanks, laying of underground cables and water pipelines, laying of underground sewage lines with the sewer treatment plants, development of landscape gardens, drainage system. These are certain additional part. And demarcation of course, we need demarcation of individual plots, because without which we cannot sell out the individual plots to different buyers. And common amenities like garden, community hall, etc., that are also offered in some certain schemes. So the facts of the case was that sale of such plots along with the community amenities to the customers who may construct, of course they are going to construct certain houses and villas on that particular plots, and charges include the rate on the super built up. This is what the observations for advanced authority was, that you are charging the rate including the super built up rate of the common amenities as well. This was an observation, one of the things. So common amenity is an intrinsic part of the plot, and the seller is selling, not only selling the vacant plot, but it is also recovering the charges of the common amenities from the customer, from the end customer, as an intrinsic part of the plot. So observation of the authority by the advanced ruling authority was that in effect the seller is collecting the charges toward land as well as the common amenities, roads, tanks, water tanks, and other infrastructure on proportionate basis. Such common amenities are intrinsic part. Sale of developed plots is not equivalent to the sale of land, but is a different transaction. Now, it must be noted that it is a different transaction, but what is the difference? It failed to give a proper reasoning behind it. And surprisingly, very much surprisingly, it gave reference to the case of Supreme Court of Narni Construction to 2013 29 STR 3, that the development of basic amenities and selling of developed plots tantamounts to rendering of services. That was a view taken by the Supreme Court in case of Narni Construction Private Limited. We'll discuss in the coming slide. The point that I would like to address over here is that as per clause 5b, because this is where the advanced authority said that this is where it is covered under the supply of services, that as per clause 5b of schedule 2, the construction of complex building, civil structure or part thereof, including a complex or a building intended for sale of a buyer is a supply of service, and hence is liable to GST. So nature of supply, so this is what the authority wanted to say, that if it is a sale of developed plots, that is sale of plots with basic amenities, then construction service. So it is classified as a construction service as per clause 5b of schedule 2, and GST shall be paid by that 5% or 1% without ITC, which is applicable. If it is sale of plots only, I mean without any amenities, a naked plots are sold, then of course it is a sale of plot, sale of land. So this is what it was trying to give the difference in the transaction, that this is the difference in the transaction of sale of land and sale of developed plots. Now, in our personal view, the sale of land with certain basic amenities is not sale of land in accordance with the clause 5 of schedule 3 of CGST Act. That is what the authority said. It must be noted that even though with the basic amenities are developed, the plot remains vacant. There is no construction activity whatsoever is carried out on the plot. And if you just look at this entry number or clause number B, what is covered? There is again a question that it is, again we are referring to schedule 2 item, so we cannot have an inclusion in the definition of supply, but for a while we'll forget that particular argument. But in this particular schedule 2 item, what is that construction of a complex building, civil structure, part thereof including complex building, now intended for a sale to a buyer. So what is the construction that has been undertaken by the developer of the plot? The construction activity has been undertaken outside the plot, not inside the plot. So whatever construction activity has been taken is never intended to sell. It was never intended for sale to the buyer. It is just a basic amenities which a buyer can use, can have a right to access only if he purchases the plot, and it happens to be like a member of that particular society and can can have the right to access and use this amenities. So the important part over here is that they have missed out is there is no intention to sell for the activity of construction that advanced ruling authority is referring to. So this is point number one. Now the point number two over here is that surprisingly it referred to the decisions of Narne construction. Now Narne construction decision of Supreme Court is under the Consumer Protection Act 1986. It is not under erstwhile service tax law, neither it was under any indirect tax law, neither it is under GST law. It is simply under the Consumer Protection Act. And by referring to Narne construction, the authority said that in light of about pronouncement of GST, I mean the relevant text of the Supreme Court was that the activities of applicant company is of involving offer of plots to the members with assurance to development of amenities was a service. Now we cannot read this particular line just stopping over here. We have to read the line in its entirety. That was a service. How? In what fashion? Under what definition? So it says that was a service within the meaning of clause O of section 2(1) of the Consumer Protection Act 1986. So we can have different definition of service as per different statute. Now I have reproduced the definition of service as per the Consumer Protection Act, and of course I would reproduce as per GST Act and GST law as well. But if you can refer to the definition of service, and while inferring or while looking at any particular transaction, why would we like to go and refer to the definition of service of Consumer Protection Act when we are having our own definition of service? If at all we are not having, then we can go to General Clauses Act. There is no need to go to the service definition of Consumer Protection Act. It might be in their context, it might be in the context of consumer protection, it might be in context of that particular statute. It is not so far as, at least it is not for so far as for collection of GST is concerned. So this reference of Supreme Court judgment in this particular advanced ruling is completely misplaced, and it was not required altogether. So in my personal view, sale of plots with certain amenities is a simpliciter transaction of land. Please mind well, it is not even a composite supply. It is a simpliciter transaction of land and shall not be considered supply of goods or services, and there shall be no GST on sale of residential plots. So it's like a snowball has started rolling by this particular advanced ruling of Gujarat, and might go till High Court at most, till Supreme Court, till we get a finality to this particular thing. So far as of now, the situation or the law is concerned, GST law is concerned, there is no GST under sale of residential plots. Another controversy or another snowball that has started rolling, it might also go bigger for a limited perspective, because there was a checks and balances by the CBEC and clarifying certain good things. So there was this advanced ruling by Rajasthan bench in case of Claycraft. I mean, see, there is a process, as we saw in the preceding slides, that there is a particular process of looking at a particular transaction that will look and check that whether it is covered under the definition of goods, the definition of supply, whether it is covered under charging section, whether it is covered under Schedule 3, and this is the way we should look at any particular transaction. But in this particular advanced ruling, unfortunately, the authority looked at only the wordings that has been mentioned in notification 13, that is the notification with reference to reverse charge mechanism, and without referring to any other thing. Director is a supplier of services and applicant is the company recipient of services. So whatever director remuneration is being paid, whatever amount is paid to director, it is covered under reverse charge mechanism, and GST is payable. Now, when we say that, okay, reverse charge mechanism notification says that services by director are covered under reverse charge mechanism and company is required to pay, no issue with that, no argument against that. But before that, the whatever activity that is director doing, or whatever services that the director is doing, whether it is covered in the definition of service or not, whether it is covered in the definition of supply or not, that is to be checked. So that was not checked. So fortunately, what happened is that Karnataka bench of advanced ruling back to back gave an advanced ruling that partner's salary, director's salary, maturity proceeds of life insurance and dividend on shares and capital gains, these are all not covered under the definition of aggregate turnover. And it was a relief that that can be said that even they've covered the partner's salary, the partner director's salary, and there's certain other transaction that we might come across. So this was a good ruling by Karnataka bench. And then board realized that there is some issue with the taxability or reverse charge of direct remuneration. Now they went beyond what the brief understanding should be. They bifurcated, the circular bifurcated directors into two: one, employees of the company, and another who are independent directors of the company. So remuneration paid to the independent directors squarely covered under GST, and company is required to pay under reverse charge. So the crux of the circular is that the independent directors, whatever amount is paid to independent directors, GST is applicable and company is liable to pay under reverse charge. Remuneration paid to whole-time director, including the managing director, now there was again bifurcation. That remuneration paid as a salary, then it is covered under the Schedule 3 item, employer-employee relationship, no GST. Hence, there is no question of paying GST under reverse charge by the company. Now, for other all sake, the remuneration paid as a professional services and TDS is deducted under Section 194J of Income Tax Act. There is this reference by the circular is something that was beyond GST law, because that is not what was required. It may be said as a commercial understanding or a normal understanding, but it cannot be a thumb rule sort of thing. And GST to be paid under the company by company under reverse charge. That is what the circular said. So this is what the controversy was so far, and still the part of controversy that is alive is, and the understanding over or the clarification that we need is that, for example, and this happens in many of the transactions, that the premises that company is using is owned by the director in its individual capacity, in his individual or her individual capacity, and the individual person is entering into an agreement with the company for renting or leasing of that immobile property. So that is not answered. Commission is sometimes paid to the director. That is also not answered. Again, a person can be a professional, for example, a chartered accountant. A chartered accountant can give professional services to its company as well. I mean, it can serve in a dual capacity of being a professional and being a director of the company. So not necessarily the services provided as a professional should be covered under the reverse charge mechanism. Of course, it can be covered under forward charge mechanism, but not under reverse charge mechanism. So what my understanding to this particular reverse charge entry is that any services provided by the director in capacity relationship should be covered under the reverse charge, and tax must be payable by the company. For other all, the employer-employee relationship, out and out, Schedule 3 item, and for all other services like renting of immobile property services or maybe professional services, or for that sake we can also consider commission income, because sometimes commission income is in a gray area, so we cannot 100% say that it would come under forward charge. It might come under reverse charge, but there can be a scenario where it would be covered under reverse charge forward charge mechanism. So this is what the controversy is all, and this still there are some unanswered questions for this particular thing. Another controversy so far as levy and collection is concerned is the transfer of development rights, taxability of TDR. We looked at the definition of goods and services. In case of erstwhile service tax law, there was a definition of services which excluded the definition, which excluded the immobile property from the definition of service. So now in case of GST, what has happened, they, instead of excluding the immobile property, the exclusion only pertains to sale of land. So sale of land, I mean, a vacant naked land is sold then and only then it is excluded. No other immobile properties are excluded. So what my take to is that, of course, the legal understanding of this can be that, okay, the definition of services state that anything other than goods are all services. So there can be an argument, or there can be possible argument, because this is again another litigation. This is going to be the talk of the town as and when the litigation progresses. So when I say that the X is goods and everything other than X is services, that does not mean that everything under the sky is covered under the definition of services. It can be understood in a way that there is a bunch or bundle of goods and services. Out of that, I am identifying that this are goods. So apart from this, in this particular bundle, this is services. So this is what the understanding of this particular definitions and the applicability of law is concerned, because as the title of law itself says, that goods and services tax, and we all know that services cannot cover the immovable property, and transfer of development rights is an immovable property. This is no dispute about it. But thing is that as of now, this controversy has happened, and personally I feel that this is going to be a litigious matter, and if at all there is some credit availability and something like that, then it's better to discharge the liability. The point that I want to highlight over here is that this notification number 4 2018, it briefly said that in case of development rights transfer, the person who is transferring the development rights is required to pay GST at a particular point of time. So basically, notification 4 2018, I mean, if you can just go and ask anyone, they'll say that, oh, we have notification 4 2018 and now 6 2019. So by virtue of these notifications, we have taxability on TDR, but that is wrong. The notification number 4 2018 as well as 6 2019 merely gives the time of supply. So if I am giving time of supply, that does not mean something is taxable. For example, if I say that there is no item of sale of land in Schedule 3, it is of course mentioned over there for an out of abundant precaution or giving a list of it. But for example, if the sale of land was not mentioned in Schedule 3, then whether there was that should be considered as a service, and GST should have been collected on that? Of course not. So this is of course a complicated matter, but just the point that I want to highlight over here is that the 2 points are that everything other than goods are services. No, I mean, everything under the sky cannot be the services. Point number 2 is that by way of notification, you can just give a time of supply, but by giving a time of supply, you cannot cover something which is not covered under taxability. So this can be the two different arguments for non-taxability. Again, similar case of liquidated damages. Liquidated damages are basically covered under that Schedule 2 item, clause 5, that agreeing from refraining and tolerating an act. So that item, notification 12 2017, this is exemption notification. It identifies a particular transaction and says that this is an exempted transaction. So as I said over here, that this notification says that we are defining a time of supply in a particular transaction, does not necessarily mean that this transaction is taxable or leviable to tax. Similarly, if I exclude something or if I exempt something, does not mean necessarily that it is a taxable transaction. So this transaction of liquidated damages is again that litigation method, and it is going to travel higher in the higher forum so far as litigation is concerned. This was a circular that was of course very intended circular by CBEC. As I said, that in case of Schedule 1 item, when the goods are transferred from one place to one state to another state within an entity having the same permit account number, then they are covered under the definition of supply, and GST is payable, and GST is payable even though there is no consideration. So there was this issue raised specifically by contractors, that we are transferring big trailers and big vessels and containers, and maybe in case of other service provider like buses and aircrafts and all, from one state to another state for whatever purpose. So in that case, the GST implication, if I say that it is a GST is payable on just mere transfer from one place to another place, it would be a very heavy impact on the company. And the board clarified in this particular circular that if this movement is not involving for the supply of such conveyance, vehicles, or whatever it is, then it shall not be treated as a supply. Now, this particular circular, we can draw an analogy in some other reference, in some other type of transaction, wherein we can say that this not involving further supply of goods or services or further supply of such conveyances, and hence it is not covered under the supply definition. This is one instance. The another instance is definition of business in case of GST is very wide. It can cover a straight transaction, a singular transaction, whether you have a pecuniary benefit or not. It is covered under the GST law, or covered within the definition. So it can be termed as in course or furtherance of business. So one argument can be that whatever transaction I am doing is not in course or furtherance of business. So this is a press release from which we can draw an analogy. This was basically for the sale of jewelry by an individual to the jeweler, and the jeweler was supposed to pay under reverse charge as per section, that dreaded section of 9(4) of CGST, which was of course discontinued. But if you can just go through this point number 4 highlighted part, even though the sale of old gold by individual is for consideration, it cannot be said to be in the course and furtherance of business, as the selling old gold is not the business of the said individual, and hence does not qualify as the supply per se. Of course, we have to wait till the press release, what pressure a press release can put, but an analogy can be drawn from this particular press release, stating that of course they're not defined what should be considered in course or furtherance of business, but there is a scope of saying that, look, I'm not doing this in my course or furtherance of business, and this is just a transaction which should not be covered under the definition of business, and hence it should not be covered under the definition of supply. This was one more circular, wherein it said that movement of goods from one place to another place cannot be said as a supply transaction, even though it was moved from a principal to an agent. So there was this artist who do the painting work. Okay, he does the painting work, and he transfers the paintings to his auctioneer. This auctioneer displays this painting and conducts the auction. Now, notably, in term of agent, the auctioneer word is mentioned. So auctioneer is no one but an agent of an artist, so far as definition of agent is concerned. So when an artist is moving his goods from his place to his agent's place located in different state, then it can be said that it is covered under Schedule 1, supply of goods or transfer of goods from one state to another state to his agent. But this particular circular carves out a particular scenario, a particular situation, stating that no, this is not covered under the Schedule 1 item, and it can be said that it is sent on sale or approval basis, and hence GST is not supposed to be paid on this first leg of transaction. And when eventually this painting has been auctioned and eventually it is sold to the third customer, only then and then it should be considered as an actual supply, and hence there should be no GST on the initial transfer of painting from artist to his auctioneer, who is covered under definition of agent. So these are all certain exceptions that has been carved out in a certain situations, excluding from the excluding as a transaction from the Schedule 1 transactions. So this is what circular says, that artists supply for exhibition to the gallery. Of course, gallery is nothing but an auctioneer. So no consideration is flowing from gallery to artist. So auctioneer does note a supply, and then eventually when it is supplied, tax is to be paid. And of course, the amount which has been paid is by customer will be received by the artist after deducting certain percentage by the gallery or the auctioneer. So it is a supply of painting by an artist to customer, which gallery or the agent facilitates. Since we are into the levy and collection, there is one more transaction which needs to be understood, and which is again going to be a talk of the town maybe in coming days. This is a circular on concept of mutuality. What is the concept of mutuality? The concept of mutuality says that the illustration that has been given is that there are 4 members in a JV, including the operating member. So one is an operating member. Every member contributes to 100 rupees to that operating member. That operating member purchases a machinery of say 400 rupees for the JV for the use of oil production. So the transaction is, there are 2 transactions, 100 rupees transaction by each member to the operating member, and then eventually operating member collects that 400 and then purchases a machinery. So the transaction of giving the contribution of 100 by JV member to its operating member is not considered as a supply transaction. Is not to be considered as a supply transaction because of the concept of mutuality. So following that concept of mutuality, in case of Rotary Club of Queen's Necklace, the advance authority said that being a club and the various members of the club, when I collect the membership subscription from my members, it is nothing but covered under the concept of mutuality. It is only mutual arrangement between the members and the club. So basically, club's organizing committee or administrative committee is the operating member, and the members of the clubs are basically the member that has been given in this illustration as a member of JV. So by following this particular thing, the Maharashtra Advanced Ruling Authority ruled that the membership subscription given by members of the club to its club or the administrative committee of the club for the amount of to be spent towards the meetings and administrative expenditure for the club. Of course, the club collects only for that sake. Then it is not covered under the definition of supply, and it is outside the scope of supply, and no GST shall be levied on this particular thing. So this can, I mean, there should be, because it also amplifies a thing that when the organizing committee of the club or the club procures the services from third party, there is a taxability on that party. So there would be double taxation if I will collect from the subscription charges of the members, because it is merely to meeting the administrative expenditure of the club. So this is also an exclusion that has been carved out so far as an advanced ruling is concerned. Now we'll quickly move on to the IGST Act. Of course, the charging sections remain same, but the point I would like to again highlight over here is that, and the point that we had parked earlier about this transfer of out and out transfer in that advanced ruling of Kerala in case of synthetic regarding that goods transfer, that we would like to discuss. Now, before going to that particular case, again, it is better to read the bare provisions of the law, the charging section verbatim, and I'll just read it out. They provided that the integrated tax on goods imported and goods shall be levied. So this is basically for the goods that are imported into India. Now, if you look at the definition of import, means the import as far as IGST is concerned. It says that bringing the goods from a place outside India to a place within India. So the goods must move from a place outside India within India. So that is only covered under import. Otherwise, the transaction is not covered under import. So when the goods are moving out and out, it is not covered under import transaction. Point number 1. Point number 2, shall be levied and collected in accordance with the provision of Section 3 of the Customs Tariff Act. So now how and in what manner this shall be levied and collected. So again, a levy and collection of this particular transaction of import of goods has been, for that you have to visit to the Section 3 of Customs Tariff Act on the value determined and mark this word at the point of time. When we look at this particular phrase at the point of time, what can be the interpretation, or what should be the interpretation, is that at the point means tax can be collected on import of goods at that point only and no other point. So there can be no tax collected at any other point, but only at that particular point. And which point? When the customs are levied on such goods as per the Customs Act. When we say the customs is levied on the Customs Act, is only levied when the goods are cleared for the home consumption, and not till the goods are cleared for the home consumption. So if goods are on high sea, goods are in a custom bonded warehouse without paying of customs duty, without clearing the goods, then also customs duty is not payable. So when I say that I have delegated the powers of levy and collection as per the section 7 of Customs Tariff Act, I have to follow what Customs Tariff Act says. And Customs Tariff Act says, the customs law says that goods, as per section 12 of Customs Act, it says that customs duty on the imported goods can only be collected at the point of time on which the goods are cleared for home consumption. So GST also can be collected at that point of time and no other point of time. So briefly we'll touch upon this IGST on ocean freight transaction, because when I'm importing the goods simultaneously, if it is an CIF transaction, then there is an deeming fiction carved out by way of notification 8/2017, which says that when goods are transported from a place outside taxable territory by a vessel to India, I mean, which are eventually cleared as a domestic clearance in India, then in case of CIF transaction by way of deeming fiction, the 10% of CIF value will be considered as the freight amount, and on which GST is again to be paid. Now, just to understand this by way of an example, of course, this has been struck down by the Gujarat High Court in case of Mohin Mineral case. And so far as I know, that government or the government has not yet is in process of filing an appeal before Supreme Court in this particular case. But as of now, this particular levy has been struck down by the Gujarat High Court, but levy of course is there in law. So legally speaking, yes, the taxability is there on ocean freight in case of import of goods, but High Court has struck down this. So this example will explain the transaction and the double taxation that was happening in this particular case. For example, I am importing a goods for say 10 lakhs of euros, which is converted to 80, then 8 crores of euros. So total CIF value of this particular transaction happens to be 8 crore. Then a 10% customs is to be paid, that is 80 lakhs, and there is a surcharge. So 8 crore 88 lakhs is the amount after the customs duty and surcharge of customs duty. So as this charging section said, that GST is to be paid when the goods are duties of customs are levied and goods are cleared for home consumption. So at that point of time, I am paying the IGST under reverse charge as an import of goods. So on 8 crore 88 lakhs at the rate of 18%, for example, it is an 18%. So I am paying 1 crore 59 lakhs 84,000 IGST on import of goods transaction. So goods I have imported. Now, as this particular notification or corrigendum of the notification says that when it is a CIF value, you have to carve out, you have to identify by way of deeming fiction that there is a 10% of ocean freight element there in CIF value. So in case of 8 crore, this 80 lakhs is an ocean freight, and by calculating the IGST at the rate of 5% of ocean freight, 4 lakhs of IGST is again payable. So this 8 crore CIF value, I have already paid IGST on import of goods as 1 crore 59 lakhs. Now by way of this deeming fiction, again on the same amount 4 lakhs is asked. Of course, it is available for as a credit to me, but that would be a blockage of credit, because there would be in a lot of cases there is a blockage of credit. So if at all that is not payable, then fine. So this amount, of course, it is available as credit, but there is dual taxation on the same value. I'm paying tax, one as a goods, one as a services. That is not tenable. That is not proper. That is what Gujarat High Court said in the Mohit Minerals. And the only thing, or the only true argument that needs to be taken care or understood is that having paid IGST on the entire value of import, inclusive of ocean freight, because see, in this case, 80 crore is inclusive, even though you are carving out, but 8 crores is the amount in which ocean freight is included. So I have paid taxes on that amount as well, the entire value of export, that is inclusive of ocean freight. So petitioner cannot be asked to pay tax on ocean freight again all over the notification. And the another argument was that in case of CIF contracts, so far as ocean freight transaction is concerned, the service provider of ocean freight is also outside India and service recipient is also outside India, because I have told my supplier who is outside India that you arrange for the transportation, I'm not going to arrange for the transportation. So that ocean freight transaction has been between the shipping line that is located outside India and my supplier who is also located outside India. So on this particular transaction, which is happening altogether outside the territory of India, there can be no GST. So Gujarat High Court gave that thing, and in 2018 that final order came. It said that these notifications are declared as unconstitutional. No GST can be levied on ocean freight. Of course, there is a GST on import of goods, but there can be no GST on ocean freight. So this is what happened recently in Gujarat advanced ruling, that there is an overseas customer, there is an applicant who is in India, and overseas supplier. So directly overseas customer receives the goods from my overseas supplier, and the payment is done by me to the supplier, and I've received the payment from customer. So this is an out and out transaction that we had discussed earlier. So in this case, we had that Kerala advanced ruling of Synthet Industries Limited. It briefly pointed out that there is no import transaction, because as we saw that if the import of goods, we need to have goods bringing into India from place outside India. So there is no import transaction. And then simultaneously, all the transactions are having outside the taxable territory of India. There can be no GST on that. Another transaction of supplying goods from my vendor to my customer. But in case of the Sterlite Technologies Limited by Gujarat Advanced Ruling, it said that there are two different transactions. One is an import transaction, or one is a purchase transaction, another is a sale transaction. So it said that purchase transaction, of course, it is not covered by way of Customs Circular 33/2017, that high sea sale are excluded and this type of transaction are excluded. So there shall be no GST on such transaction. Of course, I mean, without giving any reference to this circular, merely by referring to definition of import of goods, we can say that there is no GST levied, because it is not import of goods, because it is not clearing the customs frontier of India. But in case of sale transaction, the ruling said that it is very well covered under section 7(5) of IGST Act, which said that the supply is located in India and place of supply is outside India. It is an interstate supply, and hence it is covered under the and hence GST is leviable. Now the point that the ruling that the authority missed out here is that every transaction which is an interstate supply may not necessarily be covered under GST. And as rightly pointed out in this Synthet Industries Limited by Kerala, that any transaction that is happening outside the India, outside the territory of India, shall not be covered under the GST law. So the another point over here is that it also did not give the reference to Schedule 3. The 3 items that were added in the Schedule 3 from 1st of February 2019, by limiting the scope of supply, that reference was also not given in this particular ruling. Of course, the period was for which the advance ruling was sought was before 1/2/2019, and so is the case in case of this Kerala advance ruling. But so this is again a misfire from the Gujarat authority regarding the taxability of GST on this particular supply. High fee sale, yes. Now the point that I would like to discuss, because we have discussed all 3 subsequent entries to Schedule 3. One is out and out supply, another is high sea sale, and third one is the supply when I'm importing the goods, I'm just storing the goods in a custom bonded warehouse, and I'll fetch some from some customer, and I'll just show him the goods over there in custom bonded warehouse, and I'll show that if this is your requirement, you can have it, and I'll just sell the goods by endorsement of documents. Please mind well that goods are still lying to custom bonded warehouse. They are not cleared, and custom duty is not paid, so they're not cleared for the home consumption. So that transaction happening of sale and purchase in custom bonded warehouse is also excluded in Schedule 3 of CGST Act. Coming back to high sea sale transaction, of course, the Maharashtra advanced ruling in BASF India Limited prior to the circular of customs ruled out that the high sea sale transaction, it shall not be paid. I mean, GST is not supposed to be paid on that transaction, but it treated that transaction as an exempt supply under GST. Now, when I say it is treated as exempt supply under GST, means it is a supply, but which is exempted. And when I say exempt supply, then Rule 42 for the reversal of ITC will kick in. So when I say that it is an supply, it is an exempt supply, and I have this common credit available to me, so I have to reverse ITC, as per Rule 42. Now, this is what difference happened when this particular transaction of high sea sale was added to the list of Schedule 3. Schedule 3 says that it is neither supply of goods nor supply of services. So even Rule 42 cannot apply to those items that are listed in Schedule 3. So after 1st of February 2019, there is no requirement to reverse the credit. Even though I'm high sea sale, I'm having a high sea sale transaction, even though I'm having the out and out supply transaction, and even though I'm having this supply of goods in custom bonded warehouse, it shall not be treated as supply, and hence it cannot be treated as exempt supply, and hence there can be no reversal. So this is what that circular said. Composition levy, just recently this amendment came, so just a snapshot of the entire thing. Manufacturers 1.5 crore turnover limit, 1% of aggregate turnover. Restaurant service 1.5% crore, 1.5 crore, 5% of aggregate turnover. Of course, there is no need for restaurant to go in composition scheme, because 5% he would be paying it from own pocket, and in normal levy also there is a 5% without ITC. So this is a redundant entry so far as restaurant is concerned. Traders 1.5 CR, 1% of taxable supplies. Mind you, it is a taxable supplies in case of traders. There can be a mixed supply of services along with this manufacturing, restaurant and trader services, and then also they can continue paying at 1% on the taxable supplies, or 5% or 1% aggregate turnover, which is applicable. But that portion of service must be limited to 10% of turnover of previous financial year or 5 lakhs, whichever is higher. This particular term came from 1st of February 2019, and from 1st of April 2019 they introduced new scheme, that is mixed composition scheme, wherein you can have a mix and match of goods and services, but and you can only have the services as well, only service supply. 6% of aggregate turnover and 50 lakhs is the limit in this particular case. So I am through with my levy and collection part, and just briefly will touch upon their classification exemption. My time is, I guess, about to get over. Rahul bhai, I think within 2 to 3 minutes I'll just wind up. So these are basically GST rates. Central government, on the recommendation of GST Council, has given so rate, Schedule 1, Schedule 2, Schedule 3. Please note that we are having actually rate of tax in schedule, while customs we have a tariff act. The entire tariff act is there. So when we look at the notification number 1 2017 of central tax rate, there is this explanation given below the notification. It said that for the purpose of this notification, tariff item, subheading, heading and chapter shall mean respectively as tariff item so and so far mentioned in the Customs Tariff Act. We do not have GST Tariff Act, separate tariff act. We do not have. We just have a list of rates. We just have a schedule of rates. However, in customs, we do have this entire different act that is known as Customs Tariff Act, with different tariff items, headings, subheadings, chapters, chapter notes, general explanatory notes. So this particular notification says that the rules of interpretation of first schedule of Customs Tariff Act, including the section, chapter notes and general explanatory notes, shall also apply to this notification. This means GST's notification. So we can very well go and refer to this interpretations or rules of interpretations, chapter notes and explanatory notes of Schedule 1 of Customs Tariff Act to interpret what should be the taxability so far as GST is concerned, to identify and classify a particular item in GST. And so far as GST is, so far as Customs Tariff Act is concerned, these are the broad outline of the tariff. It has sections, it has chapters and sub-chapters, it has headings and sub-headings. So section is basically a grouping of number of chapters which codify a particular class of goods. So section 1, it has live animals in it. Section 4, it has food stuff in it. Section 12, it has footwear, headgear and umbrella in it. Chapter is basically containing a different chapters of a particular class. So food stuff can have multiple chapters like preparation of meat and fish, sugar and sugar confectionaries, cocoa and cocoa preparation. So it basically covers the entire thing of prepared food stuff. And heading is particularly divided into different type of goods covered within the single chapter. So a food item, maybe cane or beet sugar, or sugar confectionery chapter might have the heading of cane and beet sugar, other sugar and molasses and other confectionery. So this is how the tariff of customs needs to be seen. So the first 4 digit are basically heading, second 2 digit are subheading, and the last 2 digit or the fifth and sixth digit are tariff item. So this is how it should be interpreted, the dashes, because we do have dashes in the Customs Tariff Act, and they are of great importance. The single dash means a group of goods, two dash means subgroup, a triple dash or quadruple dash means sub classification. So in this example of 2008 tariff item, this fruit nuts is basically a group of goods. A single dash wants to give, see, the group of goods is fruits, nuts, and other edible parts. So the first dash gives you the nuts, the another dash gives you the other including mixtures, and so on and so forth. It is described. So first 4 digit are heading, second fifth and sixth are subheading, sixth and seventh and eighth are tariff heading, and this is how a Customs Tariff Act needs to be interpreted. Broadly, I don't want to cover the entire the list of exemption, but broadly the understanding of exemptions, so far as services are concerned, you can categorize into the supplier or recipient based exemption, or activity based exemption, and recipient and activity based exemption. So each and every item of the exemption are peculiar in their own. So when I say that any service is provided to government, so that is the recipient based exemption. So my recipient must be government, and that type of services I can provide to any other party other than government, that it will be taxable. If it is provided to government, then it is exempted. Activity based, so I am doing certain activity, and that activity is exempted per se, and not the recipient I have to see. So that is again a different category of exemption. Recipient and activity based exemption means, example that we can take is the educational institution. So if I provide services to an education institution of catering, then it is exempted. Okay, so this is again a recipient and activity based exemption. So each and every exemptions we need to test independently on case to case basis, and whether the activity or the transaction that we are looking at is actually covered in this particular exemption or not, that can be understood by way of this broad classifications of exemptions. So yes, this is the broad classification exemption. The exemption why they are giving, certain exemptions are conditional, certain exemptions are non-conditional, that are absolute. Under certain exception circumstances as well, that is certain exemptions are given. For example, some goods supplied to ISRO or some other scientific research, they are covered under 5%, a specific exclusion with certain list of procedure to be done. So that type of exemption or reduced rate is available to certain supplies. So that is all from my side. Thank you very much for the patient hearing. If any questions are there, Bishan bhai, Devam, if any questions are that we can take.
रख दो।
નતો તો મેં બે વાર દબાવ્યું. હા હવે આવ્યું.
So, welcome to the
Punitbhai Pajama sir.
virtual session. And now I request CA Dilip Chechani to give introduction of our second faculty, CA Punit
Hello.
Prajapati.
आ गया ना? वेब दिख रहा है क्या?
Dilip bhai, if you are not visible or if there is any problem, I request you to introduce Punit bhai through
Yes.
audio only.
Very good evening to all. Today we have CA Punit Prajapati with us. We all know him, but just to brief, he's founder partner of Punit Prajapati and Company Chart Accountant since 2005. He has assisted Dr. Nilesh Suchak for around 7 years. He's practicing in the field of indirect taxation, particularly in service tax and excise for more than 13 years. He's member of ITT Committee of Gujarat Chambers and Industries, ITT Committee of Ahmedabad branch of ICI, ITT Legal Representative Committee of CA Association Ahmedabad. He appeared on news channels for GST discussions and other topics, appearing before adjudicating authorities, First Appellate Authority, Custom Excise and Service Tax Appellate Tribunals for service tax matters. He is co-chairman of Indirect Tax Committee of Ahmedabad branch of WRC of ICI. He is also providing services to corporate and multinationals. He is co-author of the book FAQ on GST, a handbook published by CA Association Ahmedabad. He has been awarded with a trophy for Best LED Study Circle meeting from Chart Accountant Association for financial year for year 2014-15. Very warm welcome to you, sir. Now I will request Punit sir to take the charge. Thank you. So,
Rashmin bhai, Punit bhai, 1 minute. Rashmin bhai, are you going to stay for the whole session or are you going to now leaving this session?
I'll just briefly remain over here for a while.
Okay, so friends, we would like to thank Rashmin Vaja on behalf of Ahmedabad branch that he came here and discuss and deliberate and basically he share his knowledge and experience with all of us. So Rashmin bhai, thank you very much on behalf of Ahmedabad branch that you accepted our invitation. And what we'll do that we will try to send you the questions of the participants, and in this time, in these 4 days, if required, we'll once again ask you to join through virtual meeting. So thank you very much, sir. Punit
No
bhai,
problem. Thank you.
Punit bhai, you can start. Sorry for interruption, sir.
Thank you, Bishan bhai. And as you already have heard the Rashmin bhai, so I can understand that your expectations is quite high. So it will be a difficult task for me to justify the subject. But anyway, let me try. Are you able to see my screen? Bishan bhai, can you confirm?
Yes, sir. Yes. Perfect.
Okay.
Perfect.
Thank you very much, everybody, once again. Before I move to my subject, let me discuss some basic thing which can be helpful to us in understanding the valuation related rules and issues in a GST. First of all, entire rules of GST is more or less originated from excise and custom. It means that if we have a good law decided by the courts in an excise and custom on a similar rules, we can use such a judgments clearly in a GST also. So it means that whatever the legacy we have received in a valuation in an excise and custom will be useful to us in a GST also. Another aspect from this scenario is that excise and custom is related to goods and not related to services. And as these rules are originated from excise and custom, means goods, we do not have much settled principles under these rules for services. It means that services, we will see number of changes in evaluation rules in a very near future, or maybe during the long terms. Court may be deciding that rules again and again, and it may take time to settle these rules for services, and if not the goods. Another issue is that such a rules are actually drafted keeping in mind the provisions of an excise and customs, means manufacturing and clearance of goods, because the levy of excise and customs was based on manufacture and clearance, and however now that entire levy in a GST is based on the supply. So to that extent, we need to keep these things in mind, that we have to interpret that law or rules against without having a bias towards that definitions of a manufacturer, or we need to understand that all the law or case laws which are decided during an excise and custom were declared or decided based on the fact that the levy was based on the manufacture and not on the supply. So with these words, let me move further. There is one very celebrated concept in an indirect tax, that if levy fails, if the valuation fails, levy fails. It means that if there is no proper mechanism for valuation in a law itself, that entire levy will be held as an invalid itself. So if levy fails, valuation fails. Will this concept be valid in a GST also? Yes, this concept will be valid in a GST also, but we need to understand that government also has taken a proper care while drafting the GST rules. There is one GST rule number 31 which says that if you are not able to determine the valuation according to the section 15 or the rule 27 to 30, in any case, then no worry, you have to determine your valuation in the GST law for the GST law according to the principles which are set under section 15 and rule 27 to rule 30. So even if there is no provision or mechanism for any particular situation for valuation in the GST, now it will be very difficult to argue that there is no mechanism for valuation in the GST. So rule 30 is going to create a lot of problem, where we are not able to determine the valuation under the GST law and provisions and rules. Another, we need to understand that now entire GST levy is based on the transaction value. What is the transaction value? Transaction value means the contract value. It may be differ from client to client, case to case, supply to supply. For example, on gold, duty is payable at the time of import is based irrespective of at what price you have imported the gold. So irrespective of the price or a transaction value, the department or government can levy the custom duty at that value. But it is not so generally in a GST. GST says that a transaction value will be adopted for a levy of a GST. So if for similar transaction, I have a transaction value with an A is 100 rupees, the levy will be at 100 rupees. And the similar identical very same transaction is with B, then at a price of 80 rupees, the GST will be levied on an 80 rupees in the case of a B. So that is the transaction value. We need to understand that. What is the transaction value for the purpose of a GST? First is that the price actually paid or payable. So that entire price at which the supply has been made is an actual price for which the price is to be paid or payable in the future. It means that suppose you are purchasing an iPhone from one store and you are going to pay 50,000 rupees. In that case, that 50,000 rupees is actually paid or payable for that particular transaction. Another condition is that the supplier and the recipient should not be related at all. If the supplier and the recipient are related, in that case, that transaction value or that invoice value will not be accepted for the purpose of the GST. In short, we cannot say that there is a transaction value at all. So another ingredient or precondition for the transaction value is that the buyer and supplier should be not related. Another is that that particular price at which the transaction is being undertaken must be the sole consideration. What is the sole consideration? Sole consideration means that anything other than that price, nothing other than that price is flowing from the buyer to recipient, or the buyer to supplier, or a recipient to supplier, or from anybody on behalf of the recipient to supplier. If it is so, it means that the price is actually paid or payable, supplier and recipient are not related, and the price is the sole consideration. If that is your case, let me tell you, your case is over. You do not need to go to any valuation rules. Your transaction value must be adopted for the levy of the GST. And nobody can force you to adopt any different valuation if you are able to satisfy all three conditions for the transaction value. As in an example, I said that valuation can be based on the two types. The valuation can be based on the value, or that is called ad valorem valuation or ad valorem duty. It means that the tax is payable on the value. Is it possible in the GST that suppose from tomorrow's GST Council and government want to tax, say, sanitizer at 250 rupees flat, irrespective of at what price it is being sold? Is it possible? Yes, I think it is possible, although it is not there till today. But under section 15 subsection 5 of CGST Act, central government has been granted a power that if central government on the recommendation of the GST and GST Council can fix a value irrespective of the transaction value. So it goes with the very opening sentence that notwithstanding anything contained in section 15.1, it means that even if your transaction value is otherwise acceptable, government can notify some rules or some fix some value or fix the separate base itself. For example, say for gold, there may be a per kg duty irrespective of actual price. Yes, that is possible in GST today, but I am not aware of any notification issued under that valuation rules or section 15 subsection 5. Now, what is the transaction value? Transaction value is actually a contract-based valuation. It means that, as I earlier said, it depends on contract to contract. Suppose Bishan Bhai comes to me and says that, Punit, why don't you supply me this one laptop? Then, and you will, I can pay you 50,000 rupees for that. I said, okay. Next day, the Bishan Bhai once again comes and says that, Punit, you do one thing, you just supply me that laptop without the Windows installed therein, and you just give me that price at 40,000 rupees. And I will purchase I purchase that Windows separately, even it may be from you itself. So, in a first transaction, entire 50,000 will be taxed as if it is a sale of a goods of a laptop. And in a second contract, computer will be taxed for 40,000 rupees and software will be taxed at 10,000 rupees. So the valuation in a GST is based on the transaction value, means that it is a contract based levy. If you are able to change your contract, your levy will also get changed. So please keep this thing in your mind that contractual terms are going to determine your taxable liability. Another thing I already discussed is that if you are able to satisfy all three conditions stated in section 15 subsection 1, you do not need to go to the valuation rules itself. You forget about anything. No one can force you to go to the valuation rules. So you do not have to open the valuation rule book, rule 27 to rule 32 or whatever it is. You don't have to go to that. Unlike excise, there is no concept of an MRP based valuation in GST today. Now till today, in entire GST, the valuation is based on transaction value only and not other than that. Now we understand that transaction value is a contract based levy, and transaction value is a value which for the goods or services which at which a buyer is expected to buy that goods or services, or what buyer wants from you. Based on that, now it may happen that in number of contracts, particularly in works contracts, it happens. The recipient of the goods or services says that, look, Mr. Supplier, you supply me the services or you supply me the X and Y goods. I will give you an Z goods so that you can use that Z along with an X and Y, and you provide me the works contract services. In that case, whether the free material of Z given by the recipient to the supplier can be added to the value, that is the question. According to me, the transaction value is merely for X and Y and not for Z. So nobody can force you to add the value of a Z because it is a contract based levy, and transaction value is only for X plus Y plus services and not for Z. So you cannot go beyond that X and Y. Now let me go to that some valuation rules first quickly, and then we will move to that issues in the GST for valuations. Rule 27. Now suppose you are not able to fulfill any of the conditions stated in the section 15 subsection 1. It means that either your price is not sole consideration, or you are supplying to a related party, or you are say that price is actually not paid or payable at all. So in that case, you do not have any option, but there is no transaction value which can be adopted for the valuation. In that case, that section 15 says, now you move to the rules which can be prescribed by the government and not by the parliament. So what are the rules? Rule 27 onwards, we will go through that quickly. Rule 27 is applicable when the consideration received is not wholly or partly in money. Say there is an exchange, or there is a barter, or anything like that. So if your case is like that, when the entire price you are getting is not in the money, and you are getting something in addition to money, in that case, you have to follow this rule. What is that rule? It says that, first of all, you have to adopt an open market value of that goods. What is the open market value? Open market value means a buyer and related are not related, and on that particular date, or at that particular quantity, or under that particular circumstances, you are able to sell these goods in an open market. So suppose I am filing the GST return of a Bishan bike, and he's paying me a 5,000 rupees. I know he is not going to pay me 5,000 rupees, and particularly first, that possibility is that he is not going to give, he cannot take a chance to give me that IT return filing, but it is an example, you can assume. So suppose Bishan Bhai says me that, Punit, you file my income tax return, and I will give you the 5,000 rupees, and in addition to that, I will also give you that cross pen he always carries with him, right? Bishan Bhai, you can understand what I am going to say. So now that consideration for me is not only 5,000 rupees, but 5,000 rupees plus a cross pen given by Bishan Bhai to me, right? So that is the situation. So what valuation base I have to adopt? So rule says that, first of all, you find out what is an open market value of an income tax return provided by the Punit, right? So if that is the 7,000 rupees, you forget about everything else, and for the purpose of GST, I have to adopt the 7,000 rupees for the purpose of valuation and for payment of the GST. Now suppose open market value of that goods is not available, right? Then what? In that case, and only if that is not available, you have to move to the next, right? You have to follow the hierarchy. It says that if open market value is not available, in that case, the money means 5,000 rupees plus money equivalent to consideration, means if that cross pen is value of rupees 3,000, in that case 5,000 rupees plus 3,000, 8,000 will be adopted for the valuation of the GST. Now suppose the valuation of the cross pen is also not available, right? You do not have an open market value of income tax return. You also do not have and you do not have a value available for a cross pen, right? So in that case, what you can do? Then he says that, law says that you find out what is the like, kind, and quantity. What is the like, kind, and quantity? Quality, not quantity, sorry. So suppose I am providing a similar services, IT return, if not IT return, then something like that. You find out that, and what I am charging for that normally during that particular time. So suppose I am generally charging a 10,000 rupees, then you forget about the first two rules. The law says that I will adopt the 10,000 rupees for the valuation of the GST. Now suppose that is also not available, like kind, because I do not suppose I am not practicing in an income tax at all, and hence I don't file an income tax return, or I do not file any returns. In that case, all the first three rules will not be available to us, or it is not possible to follow. In that case, there is the fourth one. What is that? It says that money paid by the Bishan Bhai to Punit. What is that? 5,000 rupees plus value of consideration. What is that consideration? Another cross pen. A value of a cross pen, and if the value is not available, how I will find that value of a cross pen? he says that no worry, you find out that value of a cross pen according to the rule 30 and 31. What is the rule 30? We will see further, right? So now we have to find out the value of a cross pen. I have to add 5,000 rupees on that, and I will pay the GST on that particular value. Now I am moving to rule 28. Rule 28 is applicable when the transaction is between the relevant or relevant or a distinct person, related or distinct person. What is the related or a distinct person? Family member or a person who commonly have an interest in a third person or a third entity like this. It is already defined in the law. I am not going in the basic provisions. Or say, and a branch in another state, right? What is the valuation method for that? First of all, you adopt an open market value. If open market value is not available, you find out what is the like, kind, and quality value of that particular goods. If both is not available, then you should refer the rule 30. What is the rule 30? Rule 30 means cost plus 10%. And rule 31. Rule 31 is a residual rule which says that if you are not able to find out applicable rule to you, you have to adopt a principle, general principle, which are envisaged in section 15 and these all valuation rules. And based on that, you make some changes according to your requirement, but that principle should be the same. So in that case, suppose that from Ahmedabad to Bombay, same company, branch transfer. First of all, you have to find out an open market value. If open market value is not available, you have to find out what is the market value of a like, kind, and quantity. And if that is also not available, you have to find out that cost plus 10%, right? Now, there is two provisions which are overriding the above three rules. What is that? It says that if a person is supplying the goods to a related person or a distinct person, and that particular person is going to further supply that goods, in that case, he has an option to go for a 90% of the value which is at which that recipient is further supplying the goods. Let me give an example. Suppose I am supplying the goods to my brother, and I am supplying that goods to my brother at an 80 rupees, and my brother is further supplying the same goods at 100 rupees. So this rule gives me an option that I forget about the rule 1, 2, and 3 stated above, and I can value my goods at a 90% of the price at which my brother is selling in an open market, right? Another exception, what is that? If you are supplying the goods to a distinct person which is subject to GST, and if a full input tax credit is available at a recipient's end, in that case, whatever invoice value you declare, that value will be considered as a transaction value. Now, suppose I have purchased the goods at an Ahmedabad for say 1 lakh rupees, and I am sending these very goods to my Bombay branch at say 10,000 rupees. I have purchased it at 1 lakh rupees, and I am selling it as a 10,000 rupees to a distinct person, my own branch at a Bombay. Is it acceptable under the GST? The answer is yes. No one can come to you and challenge that transaction value. Yes, you can sell these goods at a 10,000 rupees. Merely you have to prepare an invoice of a 10,000 rupees. Now, suppose question number 1. Suppose what if you do not prepare an invoice at all? So if you do not prepare an invoice at all, you have to follow the rule 1, 2, and 3, and this provision or this relief will not be applicable to you. How you can use this rule or this provision? Now, suppose my Ahmedabad branch has always shortage of an ITC, and I am paying the liability in a cash. And the situation is the reverse at a Bombay office. The Bombay office always have excess ITC, and they do not pay the much liability in a cash. So can I use this transaction as a tool to transfer my GST credit, which is lying at Bombay, to here? Yes, I can do it. I can purchase the goods from Ahmedabad or a local purchase at 1 lakh rupees and can transfer these very goods at 10,000 rupees. So ITC of 90,000 rupees will be utilized indirectly at Ahmedabad for other my liability. So this is quite possible. I do not have any doubt that whether it is acceptable or not. Moving to another rule, Rule 29. If you are supplying the goods or receiving the goods through agents, in that case, what will be the valuation method? Let me tell you, Section 15 clearly says that in case of a supply made through or from agents, in that case, the transaction value will not be accepted. So, first of all, we need to understand that when the supply made through or from agents are taxable. Under GST, transaction between principal and agents are taxable only if agents or a principal are supplying the goods to each other on their own behalf, and not merely as a commission agent or merely as a pure agent, or merely they are just facilitating the transaction between the main buyer and supplier. So in such a case, if you are falling under that you are supplying on behalf of the principal or an agent, in that case the Rule 29 will be applicable, and not in the case of a pure commission or merely a pure facilitation of a buyer and seller. So let me discuss what is that rule. It says that similarly, as I give you an example of my brother, 90% of my brother's price. So that can be adopted for the purpose or for the transaction between the agent and principal. You have to adopt this valuation irrespective of an actual price. Please understand that. Now, it may happen that whatever goods you procured through your agents are not going to be used as for further supply. It means that suppose you are purchasing at XYZ goods, and you are not going to further supply that XYZ goods, but you are going to use that particular XYZ goods for supply of ABC goods. So in that case, that 90% value is not available at all, because I am not selling that goods at all, or a principal is not selling that particular goods at all at a 19%. So in that case, that facility of 90% flat valuation is not available. In such a case, what you can do is, then the rule says that you shall go to the Rule 30, means cost plus 10%. Now let me envisage a situation. There is one agent who is supplying the goods to its principal, reverse situation, or that I am talking about your buyer agent and your procurement agent. Suppose an X company is procuring the goods from its agents, through its agents. In that case, agent is required to make an invoice for the purpose of GST on a principal. Generally, in such a transaction, agents don't get that commission of a 10% or even generally they get 2, 3%, 4% of a purchase price. But now, as you have to go to the Rule 30 compulsorily, now that really that purchase price of an agent plus 10%, at that value he is supposed to make an invoice on the principal. In such a situation, it may happen that agent is getting a 1 rupees and GST on such a transaction is payable at a 1.8 rupees or even a 2 rupees, right? So it is quite possible that for an agent, his commission is merely a 2 rupees or 1 rupees, and GST is also 1 rupees or 2 rupees. So we need to understand this very concept very carefully. Valuation rules, Rule 30 and 31, I already discussed what is the Rule 30. Rule 30 says that if you are not able to find any applicable rule, Rule 27 to Rule 29, then you can adopt your valuation based on your cost plus 10%. And now suppose you do not have a cost at all, right? What value you have to adopt? Then it says that Rule 31, residual rule. It says that suppose you are not able to find applicable rule, say Section 15 to Rule 30. Your situation does not fit in any rules. Then it says that Rule 31 says that you have to adopt a reasonable means which are inconsistent with the principles and general provisions of Section 15 and rules and these valuation rules. So this is the Rule 31. I already have discussed this in the first or second slide itself. Now Rule 32. What is that? In Rule 32 there are a number of sub rules, but there is one particular sub rule I will like to discuss. There is one Rule 32 sub rule 7 which gives power to central government on recommendation of the GST Council. Central government may exempt services between the distinct person. However, it means that there are a number of doubts which are going on across the country whether the cross charge is applicable or not. What is the cross charge? Cross charge is that suppose my accounting staff is sitting at an Ahmedabad or a Bombay, and entire country's accounting is being done at an Ahmedabad, and Bombay there is no accounting and everything is on set which is been done by an done at an Ahmedabad office. One can argue that head office, which is a distinct person, is providing an accounting services to my Bombay office or my Maharashtra office or my Madhya Pradesh office or like that. In such a situation, that is called a cross charge, right? So this is the service provided by a distinct person to a distinct person. So whether it is a taxable or not, according to me, it is a taxable and it is going to be an area of a doubt in the future. In fact, we have one or two advanced ruling which clearly says that such a transaction are subject to GST and they have to pay the GST on that. This will be very difficult, particularly when your final outcome is an exempt. So one relief is clearly one relief can be there very easily. What is that? That is the Rule 32, Rule sub 7. Rules 32, Rule sub 7 clearly gives the central government or governments a power to exempt such a services. However, there is no such a notification issued till date. I hope we will see some such a notification in the future, and the taxation or doubt about that cross charge will not be there in the future, I hope. Please understand that this rule is not going to help for the goods. It is merely for the services between the distinct person and not for the goods between the distinct person. Now, I will move to some issues in a GST for valuation. There is one judgment of Chhattisgarh advanced ruling, not judgment, which goes beyond that transaction value. What is that? The transaction was like that. A transporter was providing the trucks to a cement company, and cement company says that we will pay you your transportation charges and you do not worry about the diesel, we will give you the diesel also. So applicant approached an advanced ruling and said that, sir, whether I have to add a diesel value to my transaction value or not. Advanced ruling says that yes, you have to add it. What is the ground that? Advanced ruling assumes that supplier of a GTA means a transporter is actually liable to pay the charges for the diesel, which is not the fact, right? Suppose a transporter do not pay to the petrol pump wala, and that there is a contract between petrol pump wala and cement company. In that case, there is no role of transporter at all for payment of diesel to the petrol pump owner, right? But there is an assumption by that advance ruling authority that no, you have to transporter is required to pay the charges for the diesel. It further goes and it holds that, I am reading it, diesel so provided by the service recipient to applicant for use in a trucks or vehicle of an applicant forms an important and integral component of his business process, without which a process of supply of cement can never get materialized. Now it is a dangerous. How? It is opening a Pandora's box again. It says that as the without diesel, transporter cannot provide the services, the value of diesel should be added. So what is the basis? Anything without which you cannot provide the services, the value of that services or goods must be added. Now take me an example of an auditor. Auditor goes to an audit and he need a computer for auditing at a client's place, and client says, don't worry, you don't bring your laptop, I will give you my laptop for that. So now that government or officer will say that, look sir, without that laptop it is impossible for you to provide an audit services, and hence the value of a laptop should be added to your invoice. So this is not the case. If it is so, there will be chaos, total chaos. Such a principles are already tested even in an excise service tax, and not in an India but across the globe. And after filtering all these things, the levy has been moved purely on a transaction based levy, or say transaction value, and nothing more than that. So I personally do not agree with this, and but I hope that we will see some changes or a final judgment by the High Courts or a Supreme Court in this behalf. Now discounts. Let me come to that. What are the issues that? First of all, everybody is fond to have deductions for discounts. First of all, we need to understand that for post supply discount, value can be reduced, or you can issue the credit notes for post supply discount, provided you are fulfilling that conditions. Definitely you can reduce your value, but that reduction is a subject to condition that the recipient of a goods is also going to reduce that ITC. So by reducing that ITC, he will say you, sir, okay, 10,000 discount, 1,800 IGST I have to reverse on discount, so you also pay, I am also not going to pay that money to you. And based on that, you are also reducing that liability to from your output liability. Now suppose you, even if you are entitled for reduction in value and you do not ask for the reduction, what is going to change? Nothing, sir. How? Suppose you do not ask for the reduction in value, a buyer is not required to reduce the value. He can avail an ITC. So it is a cost equally, it is a, it is a cost, zero cost for him. So merely by issuing the creditable credit note for discounts, you are just taking the chance at your head. So I always prefer, don't issue the discount, or don't ask for a reduction in due to the discount in a credit note if it is a post supply discount, right? So if your situation is fitting like that, it is practically, it is very good not to go for the reduction in the price and don't issue the credit note at all. Now you will ask a question that, okay sir, I will not issue the credit note, but will not department ask to the recipient that you have never paid 10,000 rupees to your supplier within 120 days, 80 days, so you please reverse an ITC? No sir, don't worry, we have a circular as well as an advance ruling which says that in such a case you are not required to reverse an ITC for the discount. No worry sir, don't worry. Now, what about that free samples? Can you take a credit of a free sample? We have a circular which clearly says, the circular number 92 of 2019, which clearly says that no ITC for a free sample will be available to you, right? It is not saying that you have to charge the GST on the free sample or you have to value your free samples, but it simply says that you have to reverse your ITC. What about the buy one get one free circular? We have a clear circular which says that if it is a buy one get one free, total price charge for both the product will be subject to GST. And whether it is a mixed contract, mixed supply, or it is a composite supply, you have to see according to the both the product you are giving together. Buy more, save more. There are many transactions or many schemes which is going on that which says that if you purchase the goods worth 1,000 rupees, no discount. If you purchase the goods worth more than 1,000 rupees, 10% discount. Circular 92 clearly says that if such a discount is already there before the supply, you do not have to worry about it. It can be reduced. Another issue now, I think it is already settled that you can issue the financial credit note even without the GST. Earlier there were a doubt. Some consultants were having an opinion that that is not possible. Now we have a circular which clearly says that, and even some advance ruling also accepts that financial credit note means a credit note without GST can be issued by the supplier. Another issue which is going on or need to consult, I will like to emphasize is that regarding the discount, the law is like that. If discount is predefined before the supply, in that case, and it is reflected in the GST invoice, in that case, that is allowable as a deduction. You have to deduct it from the taxable value. And if it is a post-supply discount, means it is not known at a time of a supply, then also it is allowable subject to certain conditions. I am coming to the first condition itself, or a first situation itself, where you know that this amount of a discount you are supposed to give it to the buyer, but you have not stated that particular discount in an invoice. What will happen? If you read this law very strictly, it says that pre-supply discount can be reduced from the value only if it is reflected in an invoice. So in such a situation, you will be in a trouble, right? So please, if it is a pre-supply discount, don't forget to put it in a invoice itself. And thereafter, issuance of a credit note may not be possible at all, right? Another judgment regarding the discount or advance ruling in case of a Santosh distributors Kerala. It says that whatever the reimbursement of a discount or a rebate provided by the principal company, there's Santosh distributor was an agent, and he was an agent of a principal company or one company. Say he's an auto agent or auto distributor like this. So like we have a Punjab Honda like that. So he says that this advance ruling says that if there is a discount or a rebate in a price from the principal company to a distributor, it says that that will be subject to GST. That is dangerous. It goes further and it says that sometimes what happens is a company or a distributor gives some discount which is beyond the net agreement to the buyer, maybe for XYZ whatever the reason. Suppose that main company has fixed the price of rupees 100 MRP or whatever, but the distributor, due to certain provision, sells these goods at say 70 rupees, and that 30 rupees discount has been given on instruction of a main company or a principal company itself. So principal company reimburses that discount to distributors. In such a situation, the advance ruling says that for 30 rupees received by the distributor from principal company and not from the main buyer, is nothing but a consideration received by a distributor on behalf of the buyer, and hence it should be added to the value. Very dangerous and very very wrong in the law itself. Although there is no mention of a one circular number 105 dated 20th June 2019. That circular was issued on 20th June 2019, but GST Council decided that this circular is not valid, or it is something is wrong is going on this, and on 3rd October 2019 they withdraw this entire circular ab initio, circular 105. This entire advance ruling is based on this circular itself, although no mention of this circular, but the wording is a copy paste, right? So this entire advance ruling, which is based on the withdrawn circular, is totally wrong in my opinion, and we can hope that something new can come, or at least we can see some appellate good advance ruling from appellate authority in this regard. Another issue which is going on right now is that is the time of supply extended due to COVID-19? Suppose, according to the GST law, you need to issue an invoice at a time of a removal of a goods, right? Due to the COVID, your office is a lockdown, and from factory you have removed the goods. Can you say that generally all the provisions or all the timelines are extended by the GST department due to the COVID-19, and hence I am also not required to issue an invoice which is falling, or due date of which is falling between the lockdown period? The answer is no. That notification which is giving a general extension to all that compliances do not cover the extension of a time of supply related provision. It means that at a removal of a goods, you are required to issue an invoice. Within a 30 days of a provision of service, you are required to issue an invoice. So, due to COVID-19, there is no time limit extended for the time of supply. Another issue which will go on is like this. Suppose there is a change in a reverse charge mechanism. Let us take an example of a reverse charge mechanism recently introduced in renting of a motor vehicle for passengers, working effect from 1st January, I suppose. According to the RCM related time of supply, for time of supply, for RCM is generally a date of a payment to the supplier. So suppose invoice has been raised by the supplier on 31st December 2019, and I am making the payment to that supplier on 15th January 2020. So according to the law, my RCM liability on such a transaction would arise in the month of January 2020 and not in the month of December 2019. However, in a normal charge, liability would arise at a time of raising of an invoice. Now suppose between at a midnight of a 31st December 2019, the services are changed from normal to reverse charge mechanism. Same happened with that renting of a motor vehicle or say passenger vehicle. So suppose such a supplier has issued an invoice on 31st December 2019, he is required to pay GST under the normal provision. Now coming to the buyer, as the buyer is going to pay consideration on 15th January 2020, at that time law says that you are required to pay the GST on the reverse charge mechanism because your time of supply is falling on 15th January 2020. Now, under these circumstances, let me tell you, a demand can be raised on both the parties. So this is the overlapping of the provision. So in such a situation, there is no clear-cut provision in the GST law which says that such a situation should be handled like this. But there are a number of cases which says that if the tax has been paid by the recipient, in that case, same cannot be demanded from another person. Another issue is that during that lockdown period, many of the tenants has requested or denied to pay the rent or reduce the payment. What will be your liability for such a reduced rent or reduction in the rent? There may be the two type of situation. If your contract clearly covers the force majeure, if your contract clearly covers the force majeure and tenant has already applied that provision from your contract, it means that the services are never provided at all and you are not required to pay the GST on such a rent never received by you, or the reduction in the rent which is not received by you. Another situation may be that there is no such a provision in a GST, in your contract regarding the force majeure. In that case, it will be decided mutually between the buyer or the landlord and the tenant. If both of them are agreeing to reduce the price, let me tell you, you should not worry about that reduction and you have to pay the GST only on the reduced rent and not on the total rent. So reduction in that rent, it cannot be added back to your transaction value, because now being an agree to a new value, that new transaction value is the reduced rent and not the actual rent which is the inked out in your rent agreement. So if both the party agrees, according to me, the transaction value can be changed even if it is previously agreed, and that new value can be the new transaction value for the purpose of GST. Now it may happen that tenant is asking for the reduction, but landlord is not ready to reduce it, and the matter is under litigation. In that case, it will be difficult to argue that there is the reduction in a price and the value new rent should be subject to GST and not the actual GST. So according to me, such a cases will face the litigation in the future, because to keep his claim of a rent during that period, landlord has to keep raising an invoices even during the lockdown. And as he has already raised an invoices, it may be difficult for him to ask a reduction in a future. So that is the three type of situation which may arise during the COVID-19 during the for particularly tenant and landlords. Due to time constraint, I will not like to go to the third one. Now, another tricky issue in a GST. Now, suppose I have sold some goods to my brother. My brother is an independent, he is not dependent on me. My real brother. I have purchased the goods of ₹1 lakh rupees, and I have sold these goods to my brother at 80,000 rupees. Invoice is also of 80,000 rupees. My brother is not into the business, he is going to consume these goods. So no question of an ITC. In such a situation, what will be the valuation for the purpose of GST? So first of all, we need to understand, or we need to check whether me and my brother are related party or not. Generally, yes, we are related party. Generally, yes, we understand. But what about the GST? We need to go through the provision of the GST. Explanation to section 15 says that a related party means blah 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 and the family member. So now we need to understand what is the family. So section 2 subsection 49 of CGST Act says that who are the family? Family means the spouse, sisters, no, spouse and children, plus brothers, sisters and parents if they are dependent on the person. So as my brother is not dependent on me, he is not my family member according to the GST law. As he is not a family member under the section 2 subsection 49, he cannot be a related person for the purpose of section 15. And as he is not a related person for the section 15, all the other conditions stipulated in section 15 subsection 1 are satisfied. You cannot say that this transaction is between the related person, and hence I will not go through that your transaction value. So in such a situation, the transaction value cannot be challenged. So general perception is that when we deal with our brother and sisters, we take care that whether he is take care of the transaction value. But let me tell you, you do not have to worry about such a transaction value, because the family definition of the family is very limited for the purpose of an individual, which is limited to their dependent brothers, sisters, and their parents. Now let me move to the next one. For construction builders, notification 11 says that you forget about what is an actual value of land. As this is the only single one transaction, you have to adopt 1/3 value of a total contract as if it is the value of a land. So suppose I am a builder and I am selling a flat at a 1 crore rupees. In that case, law says that 33 lakh rupees will be considered as a value of land, and builder has to pay GST on 67 lakh rupees. Good. It may happen that value of land is actually a very less. Suppose it is a 20-story apartments. In that case, value of land may be very small, maybe 10% or 2% or 5%, 10%, and the value of a construction plus profit is an 80%, 90%, whatever it is. So can we adopt this 1/3 valuation for that also? No doubt, because it is an option given to you. Even if your value of land is merely a 10%, for the purpose of levy of a GST, you can adopt 1/3 value of total 1 crore rupees as a value of land. You do not need to pay the tax or GST on this 1/3 value or 33 lakhs rupees. Now we assume that we take another example. Now it is a bungalow scheme, R3 zone. 5,000 yard plot, very costly plot. Price is 1 crore rupees for entire land plus construction. Value of a land is 95 lakh rupees, and 5,000 is the cost of actual construction. In that case, what will be your situation? According to that notification 11/2017, it says that you have to compulsorily go for a 1/3 value as of a land. It means that out of 1 crore, 33 lakh will be considered as the value of a land, and on 67 lakh rupees, you have to pay the GST at applicable rate. It may be 1%, 5%, or a 12% if it is a commercial production or you have not opted for the new scheme. So it is very dangerous now. Actually, construction, this transaction is more or less of a sale of a land itself, but merely due to some construction, say 5 lakh rupees or 10 lakh rupees, that 67 lakh rupees is becoming subject to GST. Now the question is whether this 1/3 valuation is a compulsion or option. If you read the notification, it seems that, or it is clear that it is a compulsion. You cannot say that my value is only 1/4, so I will deduct 1/4, or my value is a 2/3, so I will deduct the 2/3. No, it's not like that. The law or reading of the law is very clear. But the question is, can a value can a government go beyond the transaction value and notify something which is beyond their scope? Generally, there is no tax on the land, or there is no GST on sale of land. This is the transaction which is a mixture of sale of land plus provision of construction of a service. So in my example, government is actually collecting GST on sale of land indirectly. So merely construction is say 5%, so 5 lakh rupees, yes, government is entitled to collect the GST, but for rest of the 62 lakh rupees, merely which is sale of a land, and government is collecting the GST on that merely because of the fact that some portion is subject to GST. Is it a valid? Let me go through some history and let everybody take a call. What can be done? Similar issue happened in the case of a Wipro. Wipro is they are importing a software. Software, if it is on a DVD, that value of a DVD is a 20 rupees, and it may happen that the value of a software is a 1 crore rupees. In a customs law, there is one provision that whatever you have a landing cost, you have to add 1% on that as the unloading charges. What is that unloading charges or handling charges? Is an unloading charges means an unloading charges which is required to be paid by or which has been incurred for unloading that particular goods from ship to the custom port. So actually, do you really require a 1 lakh rupees, which is a 1% of a 1 crore rupees, 1 lakh rupees for unloading a DVD small parcel from ship to the custom port? The answer is very no. So Wipro approached to the Supreme Court. That case went to the Supreme Court. Wipro said that, sir, I understand that your custom law says that 1% flat without any option. But if it is so, you are actually going beyond the provision of the customs law merely by this provision, and you are asking me to pay the duty double, or which is really inappropriate. So in such a case, such a valuation method should be adopted only if I am not able to give you a proper valuation, right? So Supreme Court said, yes, it is correct. All such valuation methods, 1/3, 2/3, 1%, 5% flat, it must be an optional. Yes, it can be optional. There's no doubt about that. The government always have a power to give such an optional valuation rules, no doubt on that. But such a valuation must be read down as if it is an optional, because if it is not considered as an option, particularly in case when there is a separate value is available, in that case it will be result in the going beyond the basic charging provision of the law itself, and hence the Wipro recent judgment Supreme Court said that no, even if there is no another option given under the customs law, I am going to ignore that 1% valuation and I will take actual valuation which has been proved by the Wipro. So it is a well celebrated judgment, everybody knows about that, and let me tell you, it is not the first time Supreme Court has held such like that. Even in the past, for VAT also there is a similar judgment that all the such a judgments, all such a valuation are options and cannot be forced as a compulsion on assessee. Everybody knows that we also have a classic case of a Delhi High Court, Suresh Kumar Bansal, in case of a construction. It was also similar fact that 75% abatement they said I am providing, so you have to compulsorily adopt the 75% abatement for construction, for land, and whether it is a bungalow or whether it is a one-story apartment at a 22nd floor, you have to adopt this common principle. So Suresh Kumar Bansal, Delhi High Court, said that no sir, it must be read as if it is an optional, and by forcing it on assessee, you are going beyond the basic provisions of the law or a charging section of the law, and hence it has been held as an ultra virus. And let me tell you, it is also confirmed by the Supreme Court, so it is also valid law. Even similar case I already said is available in the VAT also. So according to me, this can be challenged, and we will see in the near future that some courts will clearly say that no sir, 1/3 is not a compulsion, it is a law which can be optional only. Another issue is that what about the practical call? Why can't you do two separate contracts for sale of land and sale of a construction to the extent possible? I am not saying that you do it in a say flats, but definitely you can do it in a bungalows where the sale of land plus sale of construction, you can definitely adopt that valuation. And even some advanced ruling are that which has showing us a good plan for that. Another issue which I see is that number of advanced ruling which are coming that plotting is taxable under the GST. Whether plotting is a subject to GST is not my cup of tea today. I'm not going to discuss that because Levy is not my part of discussion today. But now suppose we assume that plotting is a taxable. In that case, what will be the valuation and what will be the rate? Can we go for a 5% or a 1% applicable to the residential plots, residential apartments? For a 1% or a 5%, to decide 1% or a 5%, it says that your carpet area of a constructed property should be less than 60 square meter or higher than 60 square meter. But where is the constructed area in the plotting? So officer will argue that, sir, this provision is not applicable, 1%, 5% is not applicable to you. You forget about that. You play 18% flat, right? So that will be very difficult situation. So even merely deciding that plotting is taxable, that is not going to end the dispute. The next dispute will be the valuation as well as the rate of tax. This I don't want to discuss right now. If the time permits, I will come back. In Rule 27, Rule 28, and Rule 27, 28, 29, not 29, 29 also, it says that when you are not able to go for an open market value of a same goods, you can adopt that valuation of a like, kind, and quantity. What is that? Let me give you some example. There is one explanation which is clearly given under the end of the rules, valuation rules, which says that like, kind, and quantity means supply made under the similar circumstances. What are the similar circumstances? Similar circumstances that in respect of characteristics. यानी कि दोनों गुड्स जो है, दोनों के जो कंपेयर कर रहे हो, जिसकी वैल्यूएशन करनी है वो, और वो वैल्यूएशन करने के लिए जिसकी वैल्यूएशन अडॉप्ट कर रहे हो वो दोनों के कैरेक्टरिस्टिक्स है, वो दोनों सेम होने चाहिए, राइट? तो सपोज यू आर वैल्यूइंग say hand sanitizer, then you cannot adopt the valuation of a disinfectant or a surface disinfectant, right? So there is two different characteristics. One is being used to clean the hands, another is being used to clean the surface other than hand or human body. So you cannot compare that value of a disinfectant, surface disinfectant, with the value of a sanitizer or hand sanitizer quantity. It may happen that if it is a wholesale quantity, you are giving a heavy discount, and but the transaction for which you are seeking a valuation has merely 1 or 2 units, but you also have some reduced the price because of the higher quantity discount. In that case, that is not a comparable. You can avoid it. For example, I have sold goods to a related party at 100 rupees, 1 unit. I am also selling a similar goods at a similar time to other person, same kind of quality, to other persons, but I am a wholesaler, and generally I am charging say 70 rupees, right? So you forget about what is the price I have charged with that, but to find out what is the taxable value of that supply with the related party, I cannot adopt the valuation of a 70 rupees, because that 70 rupees is a price for a 100 quantity or say 10,000 quantity, and here I am selling only one quantity. Another is the same functional components. Their functionality should be the same. Let me tell you, give you an example of we generally now discuss is that say that for example ventilators. Ventilator generally is coming with a number of functions. So it may happen that a recently developed indigenous ventilator Daman, initially it did not have all the functions but merely some basic functions. So you cannot compare that particular ventilator with this ventilator, right? So it should have same functional components. Another same materiality. Suppose there is an iPhone which is made of say steel, and there are also some iPhone which are not made of steel but are of an aluminum. So there is a different material. You cannot adopt the valuation of that particular iPhone for this particular iPhone. Another one is the reputation of a goods. What is the reputation of goods? That is very subjective terms, right? Goods of say Microsoft, not Microsoft, but let me go with the cross pen of Bishan Bhai. Yes, a cross pen of a Bishan Bhai is the valuation reputation of a cross pen is too much high, and the value of a shell pen or cello or rotomag is not that. So you cannot compare that price for valuation. Now what the rule 30, I'm moving to the next issue or next problem, not problem, but just one study. Rule 30 says that where you are not able to find out the rule valuation under section 15 and under rule 27 to rule 29, you can adopt the valuation, valuation which is cost plus 10%. What is the cost? It says that a manufacturing cost or a production cost or acquisition cost. So if you are a trader, acquisition cost can be easily find out. But what about the manufacturing cost? Although law is a silent on that, but earlier in excise, we were heavily dependent on the manufacturing cost. For manufacturing cost or for any cost, for determination of any cost, we used to follow the cost accounting standard, and I don't think there is another option even today. So the cost accounting standard decided by that Cost Accounting Institute, ICWAI, can be the best guiding available to us. So let me tell you, for manufacturing cost, there is one Cost Accounting Standard 22. It says that cost accounting, it not says that, but it defines what is the manufacturing cost. What is the manufacturing cost? Manufacturing cost means cost of material, cost of a direct labor, cost of an indirect labor, plus indirect material used and indirect factory overhead. So that comprises the manufacturing cost. What about office administration cost? No, that is not a manufacturing cost, right? That is not a manufacturing cost. It is an office overheads. It cannot be considered as a manufacturing cost. So similarly, audit fees. Audit fee cannot be considered as a manufacturing cost unless it is directly related to a manufacturing facility, or say that facility inspection charges or like this. So this is just an example. This is just an example. What I want to say is that when you have to determine a cost under the valuation rules, you forget about everything else and you simply rely on a cost accounting standards issued by the ICAI. If required, or even in number of cases it is preferable, if you are going to rely on rule 30, say cost plus 10%, you can obtain a certificate from CMA, that is called ICWAI members, cost accountant, traditionally we used to know. You can take their certificate that this is the cost, this is the manufacturing cost, and based on that, by adding a 10% on that, you can adopt the valuation, and that will help you to avoid any litigation in the future. If such a certificate is already there with you in an advance, let me tell you, generally the officer, they are not going to challenge. Pure agents and reimbursement. There is one rule says that pure agents are subject to pure agent related expenditure are deductible from the valuation subject to certain conditions stated therein. I am not going to discuss basic provisions because Rahul has warned me that I am not going to discuss the basic provision. I have to discuss that advanced level only, because now all the you people are expert in 3 years. So I have to be very, I have to keep it at one level. So I'm not going to discuss what are the provision of the pure agent. But even suppose I am not able to fulfill certain condition in the pure agent, my basic understanding is that can someone or officer go beyond the transaction value? That answer is a no. There is very one celebrated judgment of Intercontinental, which is already upheld by the Supreme Court, which says that any addition cannot go beyond the charging section. So what is the charging section? In service tax, it was an amount charged. In a GST, it is a transaction value, right? So my transaction value, suppose you are going for an audit, and according to the contract, every facility is to be provided by the bank, say your hotel, and in that case, unfortunately, hotel raised an invoice in your name and not in the invoice of a banker. So in that particular scenario, the pure agent rule says that as the invoice is not in the bank's name, it is in your name. It means that you are liable to pay the consideration to the hotel, and it cannot be reduced from your valuation as a pure agent, and you are required to pay GST on that. But Intercontinental clearly says that you cannot go beyond the basic valuation provision or basic charging section. Will that judgment be a good judgment, or well, that law will be a good law in GST also? According to me, yes, it is going to be a good law even under the GST. Why? Because if you start going beyond the transaction value, it will create a havoc, and the law understand, or officers and government also understand, that you cannot fix the taxation which is not certain, right? Transaction value is at least certain, although there is some chances for tax evasion or something, but there should be some strong and solid basis of levy on which a levy should stand. So transaction value is a solid and ascertainable kind of a base on which a levy can be there. So according to me, Intercontinental judgment Supreme Court is going to survive even in a GST. I do not have any any doubt in believing that. Sir, we should keep the session. At what time we have to keep this session open for question and answer?
Maybe after 5 minutes.
Okay, fine. Okay, I will try to finish it as soon as possible.
Yes, sir. Yes.
Now, sale or purchase of used goods. Let me check if I find anything which should be discussed rather than. Oh, I'm at the last slide itself. No worries, sir. I'm very particular for time, Yeah, sale and purchase of used goods. There is a rule, sub-rule 5, which says that how to value used goods. Let me tell you, this rule is applicable only if you are dealing in buying and selling of a second-hand goods. It is not applicable if you are using the goods and selling it, right? So this rule is applicable only if you are dealer in buying and selling of used goods or second-hand goods. So you cannot say that I have used the car, which I am using it in a business, and I am going to sell it. So I will go to the provisions of that. What is the provision for used goods for a dealer? it says that purchase price, sale price minus purchase price, whatever the difference you have or margin you have, is a transaction value, or sorry, that is the value for the purpose of GST. So for example, you are a buyer of a second-hand car, and this seller of a second-hand car, you are a dealer in that, you have purchased a car at 1 lakh rupees and you are selling it as a 20,000 rupees. The 20,000 will be adopted for the purpose of a value of a GST. So valuation will be 20. Please don't ask me what will be the rate, right? Fortunately, classification is not my subject today. Otherwise, I will need around 20 minutes to decide what will be the rate. Now, there is no compulsion that once you have adopted for that particular method, you follow that particular method for all the transactions. So if you are a dealer, it means that such an option is available to you for each transaction. So it is possible that for some transaction you follow normal taxation, and for some transaction you follow this reduced or margin scheme. Now it says that the margin means purchase price, sorry, selling price minus purchase price of goods. It may happen that the buyer, or sorry, the dealer has spent some expenditure for repairing. So is it allowable? The answer is no. The answer is no. So suppose 1 lakh rupees cost of purchase, 20,000 rupees cost of sale. In addition to the purchase of 1 lakh rupees, 5,000 rupees he has spent for repairing of that car. So what will be the margin on which GST is to be paid? That margin is at 20,000 rupees and not the 15,000 rupees. GST is payable on 20,000 rupees. This provision is subject to condition that the ITC, if any, on the purchase of such a goods is not availed by the dealer. Means suppose we assume that there was a GST in 1 lakh rupees, this margin scheme is available to you only if you do not take the credit on the purchase at 1 lakh rupees. But now mix of the scenario. What is the value? 20,000 rupees. In that, 5,000 rupees repairing expenditure is already there, and on which you are already paying the GST. So the another question will arise is, can you avail an input tax credit which you have paid on 5,000 rupees? The answer is yes. Although even if you are going to adopt a taxation under the margin scheme. So 20,000 rupees pay GST, and on 5,000 rupees you can avail an input tax credit if any. Now another issue which is coming up is, or people had a doubt, is that now suppose I am purchasing a second-hand mobile from somebody, and that supplier is in the margin scheme and he has paid the tax under the margin scheme. I have a proper taxable invoice. Can I avail an input tax credit of that mobile purchase? The answer is available. There is one advance ruling, fortunately, also now, that Etika Gold Karnataka, which says that even if you have purchased the goods from an margin scheme dealer, you can avail the input tax credit of that. Thank you very much, ICI and Bishan Bhai and Rahul Bhai and every committee member for providing me this opportunity to share my views once again. Thank you very much.
Thank you, Punit Bhai. And now we have only one question which I would like to.
The session was so good, Punit Bhai. Only we have one question.
No, these are the questions which we have, captured till 6:45. So maybe there might be some more questions. So Punit Bhai, I guess you are able to see on the screen. Though
yes.
The question is not exactly with the subject, but I think that you can give answer to this.
Okay.
The question is,
please,
yes.
sir.
Sir, you go on.
Okay, with respect to the GST audit, now one firm who is a commission agent under APMC market and he earns the commission from sale of goods on behalf of the farmer, and in his profit and loss account only commission income is showing. But in GST he is declaring the total sale value of the goods. Now question came up, what will be the effect under the turnover of the reconciliation while preparing the GSTR 9C? Okay, sir. In a GSTR 9C, you will start off with your P&L account. You have to start with your P&L account, right? And after that, you have to add the value. There is one provision, particularly there is one column under GSTR 9C reconciliation, which says that a value or there is an adjustment under the rule 15, sorry, section 15. So under that, you have to show this value. So it may happen that the 2 rupees P&L account plus value addition 100 rupees under rule section 15. Yes, it is possible.
So that's it. There are certain questions which are of Rashmin Bhai. So viewers, we are going to address it in the last session. You are not required, supposed to worry about that. You will be appropriately, Rahul Bhai will take care to give you answers of those questions. Punit Bhai, on behalf of Ahmedabad branch of WLC of ICAI, sir, we are thankful to you that you had given your time. Also, you have shared your experience, which you have earned during these years, and knowledge also. So we are much thankful to you, sir. We request you to come again whenever we want you, and definitely I'm sure that you are coming whenever we require you to give your knowledge to our members. Members, we would like to say that Ahmedabad branch has also come with GST help desk where you can post your questions, queries, and we will be resolving those within reasonable time of 1 week. So with this, we are ending this session, and tomorrow we are going to meet again. So thanks again, Punit Bhai, and thank you, Rahul Bhai, for arranging such a nice virtual meeting.
Thank you, sir. Thank you, Punit Bhai.
Thank you, sir.
Thank you.